Welcome back, my people. This is the Road to CA podcast, the show for aspiring chartered accountants to inspire, empower, and inform the difference makers of tomorrow. Yo, today, guys, we're in for a treat. Today, we're joined by one of those rare and brilliant minds, a thinker, a deep thinker, but also a doer, putting his ambition to action as we speak. He's currently the group financial controller at Inc., a global leading edge solutions provider, innovating the business landscape through edge computing solutions with branches across 16 African cities all over the continent. It's a Pan-African company. And he's also an entrepreneur as well, having started a 7-figure revenue e-commerce business. Yeah, man, this is very interesting stuff we're going to be chatting about today. More importantly, he loves knowledge acquisition, philosophy, psychology, and dabbles in politics in his spare time. He's the man outside the mold. We're joined by Liron Leiboff. Liron, how are you, man?
Good in you, Lunga. It's great to be here.
Yeah, as I said, man, I'm excited because for me, I think one of the great pleasures of my life is to handle and deal with important ideas, which I think we'll touch on today.
I hope so. I think you're a very perceptive guy. I think we chatted a couple of weeks ago in preparation for this podcast. So yeah, looking forward to exploring some ideas, and hopefully it'll be interesting to the listeners.
Yeah, man. Okay, first thing we do at the Road to CA is we go back. So let's go back to, for you, where this whole CA thing came into the picture for you. I know you have an interesting journey towards it.
Sure. So it wasn't so straightforward. I didn't know in high school that I wanted to be a CA. I didn't even take accounting for matric. I started reading a lot of books specifically about business from grade 9, grade 10. And embarrassingly enough, I picked up the Wolf of Wallstreet in grade 10. So I was like, cool, I'm going to be a stockbroker, because obviously that's how you make a lot of money. Like, I'm going to overlook all the shenanigans, that book depicts. But obviously you make money as a stockbroker. So I'm going to go study, economics after school. And it's very, obviously, like, the American system is very different to the South African system. So a point I'd like to make is we consume a lot of content that's produced in the first world, and then try and copy paste it into our context here in South Africa or into third world countries. And it just doesn't really work. So anyway, so I started my studies, BCom economics, and lo and behold, you had to take accounting anyway in first year, and it was the same accounting as the CA stream students took as well, and I ended up doing pretty well in accounting, and after mingling with a few of my peers and students, and a couple of the guys from school went the CA stream, I decided to switch. It just made the most sense for me to have, that safety net of articles at the finish line, because you started hearing about guys, studying general BCom or like BCom finance, and it's there's a lot more competition, so to speak, after you qualify to get certain jobs, and an article just seemed bankable. So I think it was more about de-risking my career path, after varsity through changing to the CA route. So yeah, I wasn't a toddler dreaming about becoming a chartered accountant at all. I think I just really like business and economics and banking and finance, and maybe it was, again, first world pop culture movies and books and that kind of stuff that planted that seed. And CA, I guess, in our context in South Africa, is the right path towards those types of careers.
I think a really profound thought is understanding that this is not the movies, this is real life. And even in the US, very interestingly, we have this idea of the US, but we've only watched one movie in one place. And so you see the US in New York, in Wall Street in 1979. Firstly, are you going to go to Wall Street if you go to the US? Maybe you could be in, I don't know, the South. You could be in North Carolina. You could be in Mississippi. You could be anywhere, and it's tough. It's tough in a lot of those US cities. And so, like, matching the image in your mind and reality is so important. And I actually wanted to draw to this thought around the depths of your dream. So what I find is the more shallow your dreams are, the more disillusioned you'll be when reality comes into contact with your trying to realize it. I've seen so many times people say, I want this, and then you'll and I don't know if you've seen the curve of, I think it was Alex Hormozy that I saw it from. He's a business dude. But it's like this curve of entrepreneurship where you have this uninformed optimism phase where it's like, I'm gonna become a millionaire through a social media marketing. And you're like, yeah, this is the way. And then you find out that, oh damn, it's actually not easy. You start to hit informed pessimism. And that's where you're like, okay, maybe it's not as easy as I thought. And then you go to the valley of despair where it's like, I'm actually like bankrupt. I don't know how this is going to work. I don't have food in the fridge, blah, blah, blah. And that's where most people leave, where they're disillusioned. My thing about the depth of a dream is that when it's those few and those fearless few that, because they believe in this so much and they have such a clear vision in their mind, they stick the course. And what happens is you actually get, if you just stay in, if you just keep going past postgrad, past that first year articles, you get through and you past actual APC and you get the CA and past that next phase, you get to informed optimism. And if you can just keep writing it, you can actually get to your dream, which is just such a profound thought. You've also had a number of positions in your career. You've had your pick at the buffet, as they say. Like you've been a business consultant, you've been an engagement manager, VP, outsource sales, business optimization manager. Now you're a group financial controller. What were the biggest lessons that you've learned in each of those seasons? I'm curious.
I mean, it's a great question. I think the overarching lesson is that, like, I've got a curious mind, and if things sound interesting, like, I don't really care about the job title or whatever. Like, as long as the business is interesting and inspiring and doing cool stuff, and I'll be learning and acquiring new skills. Like you can see with all those roles, they're all very different. So each one I acquired a bunch of different skills, and that they've all contributed to, either me being more well-rounded in my current, full-time role, or in side businesses and starting side businesses and creating, growing my network and all of that kind of stuff. So, I mean, from a consulting perspective, you learn how to show clients the value that you want to deliver to them. I mean, a few weeks ago, we chatted about value creation and value capture. So in the consulting world, you want to show a client, for example, a mining client, that if they implement the system or the solution that you are recommending that's tailored towards their use case, it will result in this bottom line improvement to them. And for a fraction of that bottom line improvement, that is what it's going to cost them. So that is the value capture towards in the consulting environment. And I think that principle kind of, there's a golden thread from there, which was almost like a light bulb moment going through to, what side hustles are create or what businesses are join, is what the business actually creates for its customers, and what is the value differential between what the business delivers and what the business charges. If the value differential is large, meaning you delivering so much value to customers that it almost feels like a bargain to the customer, that's going to be a good business. If the value differential is not that large, or at least the perceived value is not that great to the customer, you're going to have problems. It's not going to be as sustainable as you may think or as you may like, because competition with just a slightly better perceived value proposition will win over that customer, and you'll have a high churn rate. So I think that's a really good principle to learn early on, is be involved or create a business that delivers way more value to your customers, and the differential is massive, so that your customers feel like they're having a bargain, and that becomes a flywheel of competitive advantage where it's very difficult for other businesses to compete in your space.
So would you say that was the business consulting job's big lesson?
Yeah, and I mean, as I said, like there was a golden thread, and like I kind of observed that through all my other roles. That, and like some of the companies, I won't name them, didn't have that huge variance in value delivered versus value captured. And the ones that did, or the ones that still do, are fantastic businesses.
For those who don't know the idea, so me and Liron were talking about this idea that I've been thinking about, of value creation versus value capture. So I don't know if you know, definitely a third year would have seen this, definitely a CTA student, definitely someone in articles, and obviously a CA. But that value creation diagram. So the value creation process goes six capitals in enterprise processes, operations to process the things, and then you have a valuable output, right? So that's how we create value in organizations. So that's basically what you do. So as a CA, you could be anywhere in this whole value chain, as part of the inputs. Maybe you're the person who goes and finds the capital, who raises capital for things, and all these types of things that CFOs and financial managers and people who do CA things do. Maybe you're more of an operational mind, and you're actually in ops, making sure that you're fixing processes and optimizing systems and creating systems. You could think of that as your internal auditor in some cases, right? So these are a lot of the skills that we're gaining. But basically, that's all creating value. That's the stuff that makes the world a better place, right? Capturing value is all about, and so this is stuff that we would learn in financial management, pricing decisions, marketing and sales tactics. It's all about making money from the value you create. So what Liron was talking about in terms of that differential, if you create X amount of value, let's say the customer technically would pay 100 Rand for the value that you've created. You've created 100 Rands of value in a mouse, right? Created a mouse, and now you've created 100 Rand of value. What a sustainable company is, and that's what you're alluding to in terms of the whole in terms of the ability to operate. And if you have a small differential, you won't have a lot of potential. What a sustainable company can do, remember, it's triple bottom line: planet, profit, and people. So it's not just people, planet. They capture a sliver of value compared to how much value they create. And I remember you talked about Costco. I actually want to hear what you know about them. Can you explain us? So Costco is a company in the US. It's a wholesaler. But you can actually explain us how Costco has really sort of, they've taken this value creation, value capture mental model, and they've taken it to the extreme where like they are virtually capturing nothing and they're actually giving all the value back to the customer. But can you explain that whole thing?
Yeah, sure. So the Costco model is actually, it takes value creation, value capture to the next level, which is called scaled economies shared. So as Costco delivers more and more value to their customers through low prices, they end up getting more and more customers, which makes them able to buy in larger volumes and quantities from suppliers, which generates larger rebates and discounts from their suppliers, which they pass on to the customers. And then the virtuous cycle carries on like that. So if anyone were to go in to compete with Costco now, the barriers to entry are just insurmountable because no one can possibly go and strike the same pricing deals with Costco suppliers as Costco can. So Gatorade or whatever other American brand sells huge quantities through Costco cannot give the same pricing to anyone else. I guess Amazon is getting to that level just by virtue of how big it's grown, and they've actually taken a lot of plays out of the Costco playbook. But Costco is really such a fascinating case study and really ticks all those boxes of I don't know if they tick the planet box, but definitely what's the triple P's? The people, planet, profit. Okay, so I don't know about the planet, but definitely people and profit. Costco pays the employees more than any other retailer in the US by quite a large factor. Their tenure, I can't remember the numbers off by hand, but I think like an Amazon worker, their turnover, their employee turnover is. I'm actually not going to put numbers to it because I don't know the exact numbers. So I encourage the listeners to go and look at the Costco employee turnover versus Amazon versus Walmart. But it's well reported that Costco is a fraction of the employee turnover, and people, the employees are staying there for a lot of years and actually making careers out of it, and retiring with fully paid pensions and all of that kind of stuff. So that's the people side. And then obviously the profit side, it's really just a self-fulfilling prophecy. If you deliver enough value to your customers and enough value to your people, the profits will take care of themselves. So if we want to get into the weeds a bit more about the business model, right? So Costco mandates, and they publish this in their financials, and it's been this way since inception, that they will only mark up their goods, the goods and services that they provide to their customers by 15%, a maximum of 15%. They will not mark it up more than 15%. Okay,
Gross,
so
ne?
gross.
Yo,
So-
that sounds like you're being strangled at the neck in the company.
Exactly. Costco's top line revenue, I think, is about $200 billion, the most recently. And their bottom line net profit is $4 billion. So on a percentage basis, that's like what, 2%, 2 or 3%?
2%.
And now we're taught as CAs that that's a terrible business. right? Like we'll be taught in financial management to like we should only invest in high margin, high growth businesses. Now, Costco is literally demonstrating that that is not the case. They make like 70 or 80% of that bottom line is just from their membership fees. So that is where the profits come from. So membership fees, I think it's like from like $60 to all the way up to like $140 for like small businesses or whatever per annum. And they'll have millions and millions of subscribers or customers. And those membership fees drop straight to the bottom line. So everything else is really just operating at break even. All these warehouses, the logistics, everything is pretty much operating at a slight, probably 50 basis points of profit. Right? 50 basis points of the 200 billion is probably, attributable to that 15% markup. The rest is membership fees. Now, that is the moat or the competitive advantage they're protecting. In order for people to pay membership fees, you have to deliver them more value than they could possibly get anywhere else where they don't have to pay membership fees. So like a Target or a Walmart or anything like that. So yeah, that's the model. And every new warehouse that opens in a new area around the world, they have expanded globally, and apparently there were like kilometer-long queues in China when they opened there. So people love the model, people love the good deal, and there's so many other things that are fascinating about the Costco story. Where like the one thing that they realized was people love hunting for a good deal. So they don't like, being marketed to, here's a good deal. They like going to a Costco and stumbling upon something in the warehouse and they're like, oh my God, like I actually need this and it's such a good price. And like that discovery process of actually like going to the Costco and like walking around this huge warehouse and finding things that are bargain prices that you won't be able to get anywhere else. That's also something that they've realized. And then would you say that Costco's client or customer base is, poorer America, wealthier America, middle class America? Like, which demographic do you think they serve?
Typically, logically, let me say it like this. Logically, cheaper prices, lower LSM.
Yeah, so that's not the case. The membership fees payable upfront at the beginning of the year. Most lower LSMs or poorer communities find it difficult to part with that $60, $70, $100, or whatever at the beginning of the year in order to get lower prices down the line. So Costco structurally, I don't know if this was like actually planned or that it just happened that way, but structurally speaking, they've got wealthy customers who don't steal products and services. So there's like literally zero theft, because if you steal, you'll be banned from Costco, and like no one wants to lose their Costco membership. So there's almost zero shoplifting, huge purchasing power. So, and number three, huge purchasing power. Costco, I think, doesn't pay the credit card companies anything because of the volume of payments that goes through Costco. The credit card companies were actually bidding to get that business from Costco to process those payments. Normally a merchant like me in my e-commerce, I'll pay like 3% per transaction just to accept the payment. Costco pays zero.
Sure.
That's
an example of scale
companies want that volume. Exactly.
That's one example of those scale economies. Because like in school, we sort of just in financial management or ManFin, we'll just sort of say in a discussion question, it's a big company, therefore they can take advantage of economies of scale. Guys, this is scale economies. Costco can go and say, bank, I don't want to pay any fee for credit card payments. But you, little small guy, have to. You have to pay that little 3-4%. You know what that means? It means less margin. You know what that means? It means you have to be like this. You have to you have to walk around with like you're being strangled. But to sort of apply this to a student life, students can definitely take the very business minded. So like you can use this information and this thinking in a financial management question. Cool. But in life, I really feel like we need to create more value than we capture. That's the most important thing. We need to be focused on the creation part.
Yeah, and we can extrapolate that to when you enter the working world, right? People are very quick to ask the manager for raises or wanting more salaries or big bonuses or whatever. You got to, and Charlie Munger says this, to get what you want, you need to deserve what you want. Okay, you're not just going to get 20%, 30% increases or whatever because you feel like you deserve that or you feel entitled to something like that. If you can say to the company, I have delivered, such and such project, this is the ROI that's delivered, can I capture 1% of that ROI? So let's say like I deliver 100 million rand cost savings at Anglo American through some FP&A planning thing where I've identified that if we change the route of where these underground trucks, carry the metal and we just change it, from this route to that saves X amount of fuel and that drops 100 million rand to the bottom line. Okay, I'll figure that out because I've spent extra time in analyzing the operations. Okay, cool. So I'll figure that out, guys. I want 1% of the 100 million rand savings. Like, does that sound fair? Like, in what world does that not sound fair? I've delivered my employer or my business 100 million rand. Okay, 1% of that. Like, if you frame your ask or your increase in that kind of context, like, what option does your boss or manager have but to say, I actually can't argue with that. That is the fairest thing I've ever heard.
Yeah.
Right. So instead of going to your boss, manager, CEO, whatever, and saying, I've been here for 2 years, can I have a raise? Okay, well, you've been here for 2 years, so whoopee. But if you go to them and say, I've been here for 2 years, these are the projects I've delivered. This is the recurring cost savings or recurring revenue or deals or whatever. In a rand, this is a rand value I believe that I've generated. And it's not the easiest thing in the world to forecast, especially if you, financial manager in back office or whatever. But I promise you there are plenty of opportunities to save everyone's company money. And I think that's super low hanging fruit. And I can give an example of what I've been doing lately with the business I'm in. If you go there armed with that kind of data and evidence that not only am I meeting whatever KPIs you have set out for me, I've gone above and beyond and have actually saved the company X. Like, can I capture 1% of X, 5%, 10%, whatever the case may be? Because that will incentivize me and teach the employees to carry on that good behavior, that mindset shift of, in order for me to create value for myself or to capture value for myself, I have to generate value for the business. The business is already paying you the value that they perceive that you're providing them. That was the job description. This job description is worth whatever, 750K per annum for a newly qualified. Okay, so if you hit all these things, cool. Like, you're getting your salary. Well done. If you then go over and above that, and you knock it out of the park, and you create a project or implement something, some cost saving exercise, or renegotiate, I don't know, a Salesforce agreement, or you take some initiative that creates immediate cost savings and drops straight to the bottom line. There's no reason why you can't catch one apple of all the apples that you're shaking from the tree. There's no reason why. And if you start having that framing of getting rid of, like, I'm entitled to whatever because I'm a CA and I've gone through CTA and articles and it was hard and whatever, like we've all done that. Guess what? Like, congrats, you're now earning more than most of the country. So you come through the door. You're not going to get the increases and bonuses for, stock standard performance of your roles and responsibilities. I think if you think about creating value and demonstrably creating value and showing it to your managers and the business, you will capture more value, and you will rise in that organization. And and again, as Charlie Munger said, to get what you want, you've got to deserve what you want. So that's also applicable in marriage, or in dating. If you want a great spouse, then be a great spouse. Because if you're not going to be one, then why should you get one? And it's so simple, but it's just so profound.
It is so profound, man. There were 1,000 different threads. But like, for me, TLDR, see yourself not as an expense. Don't see yourself as salaries and wages. See yourself as an asset. And if you can focus on that, you'll be able to see beyond the budget and between the line items. Because I think there's a really big misconception with, I think it's a big South African thing because there's a lot of scarcity down here. But we put our faith in the institution as if the institution is going to save us in every single way. We think they're foolproof. But truth be told, this budget was made by some dude, some lady. And that lady, that dude, had maybe even a boss that was saying, nah, don't put too much into the marketing, or don't put too much into this part. You must understand that that's the case. If you can think creatively beyond that budget, maybe, there's only 100,000 Rand or 200,000 Rand allocated to this thing. Maybe look at ways that you can actually bring in money for this specific project. You are becoming an asset. Liron, you did top articles at Nedbank. One, what was your experience? And two, what type of person is and is not for that type of program? I'm curious.
So I'm going to caveat my answer with this, as this is my personal opinion and I don't speak on behalf of Nedbank in terms of what type of person that they're looking for, or what type of person will succeed in that environment. My experience was fantastic. I think I grew immeasurably from a student to a professional. I think that is, something that doing your articles in a bank or in commerce, you kind of get a real job straight out of articles, if I can say it like that way, where I'm not trying to throw shade on any audit article programs or anything like that. I just found that you have real kind of KPIs and responsibilities out of the gate, and start taking part in real meetings, consequential decision making and reporting lines, where there's P&L, involved, and where you can actually start delivering value. So yeah, I mean, my first job was in, pretty much like a financial manager role for the global markets treasury division. So a lot of monthly reporting, half yearly reporting, annual reporting, valuing a whole bunch of different financial assets and derivatives. And I'm just trying to remember what else I did, but basically financial management 101. But obviously in an environment without physical products. The products were treasuries and kind of banking products, if you will, and fair value calculations and that impact on P&L and all that kind of stuff. My first manager was fantastic, so I was extremely lucky to have a manager that really took me under her wing and kind of backed me and showed me the ropes. And I had a great first year in articles where some of my peers didn't. And so there's a lot of luck that also goes into your articles experience in a bank, because of the scarcity of certain rotations in the different divisions. So if you want to be in corporate and investment banking, CIB, for example, they were only taking, I think, 4 trainees in my year. And there were 12 total first year trainees. So I had a quarter, I had a third, 1 in 3 chance, 33% chance of getting into CIB, which is what I wanted. And if people wanted CIB but didn't get into CIB, well, that's where the scarcity does come in. And that pretty much happened to me in second year, where everyone wanted to get a credit manager role, kind of going to CIB credit in second year. And I remember we all wrote this test to demonstrate our, knowledge of credit. And I didn't get a credit role, which I mean it is, and I think that's also one of the good things about articles in a bank is you're kind of constantly interviewing for your next rotation. So those interview skills, the taking things on the chin, the rejection, all that kind of stuff, it builds your character. And you kind of don't get that shock after articles, where I think some people from audit articles may get more of a shock afterwards, where they don't have those interview skills. You think you're a CA, so people will just roll out the red carpet for you. You actually still have to sell yourself, articulate your skills, and all the things that you've done, your achievements and all that kind of stuff. So I think that also was a positive in banking articles. But anyway, to cut a long story short, in second year I went onto the trading desk. There wasn't a rotation that was being advertised on the trading desk, but all the other rotations that were available didn't appeal to me. So I mean, because I was doing some of the books, the financial reporting for global markets, I managed to, start building connections in global markets and started kind of asking for a rotation in global markets. And I think that's also a good lesson where, if something isn't advertised, like there's no job on LinkedIn, but you really want to go work at, I don't know, whatever company, Rothschild or whatever, who, these guys don't advertise on LinkedIn. That doesn't mean that you shouldn't reach out to them, take someone for a coffee, build that network, and find that side door in, because the front door is closed or whatever. So that was also a good learning for me, where you can create your own opportunities. You don't necessarily just need them to appear and then you accept it. You can create it. So that was a good learning. And I was lucky enough to go into a sales and structuring role, which is pretty front office, meaning I was kind of going to clients, dealing with clients, executing trades over the phone, having my own Bloomberg setup. And a Bloomberg setup's a very expensive thing to get as an employee. I think that's $25,000 per annum per person subscription. And that's why Michael Bloomberg's so rich. And yeah, that was really, really cool experience. I learned a lot of technical things about derivatives and, the trading environment. And that's helped me to this day in my e-commerce side hustles, where I kind of need to understand foreign exchange rate and the impact on my landed cost, and how to hedge that and watch the currency and what products can I use to lock in certain rates and all that kind of stuff. So no, that was a fantastic experience. And then in third year, I went and I wanted to go into corporate finance, mergers and acquisition, to be more specific. Not necessarily because I'd always wanted to be an investment banker. I think it was the biggest challenge. It was very difficult to get into it. So I was like, I want that challenge, and I want the prestige of getting into that specific department and division. We all knew that they were the ones that were working 12, 14, 16 hours a day. And that perception or that aura of corporate finance, investment banking, I think, I wanted to kind of see if I could get in and excel at that. And I think I would have always regretted it if I didn't. If I kind of took the route of, going more into like a balance sheet lending role or some other role which was more chilled or kind of less pressure, like a less pressurized environment, I think I would have always wondered what it would have been like. And I think I probably would have ended up there at some point. So yeah, I got into investment banking, worked on a couple of pretty cool deals. I worked on rights issues, and how the mechanics of a rights issue works, how the mechanics of a accelerated book build works. So, for example, if a founder of a company has a big block of stock and their shares are listed, they can't just go and sell that stock in the market. It will crash. So they enlist an investment bank to sell those shares on their behalf. So let's say someone has a huge block of Sasol stock. They're not just going to unload it on the market. They'll call Nedbank or Standbank or whatever and say, I've got 2 billion rands worth of stock I want to unload. And then they'll phone around like the Allen Greys, the Coronations and whatever, and they'll offer it to them at like a 5% discount. So you'll lock in that kind of price, whatever the market price is, less 5%. And that's kind of how that happens. And that's also how it happens when, a company wants to issue more shares to raise some capital, or even how a rights issue, works is when you need to phone, all the asset managers, the PRC, to get support for these things and to get their assurance that they'll take up their rights in order to de-risk the bank. So that was more on the capital markets, equity capital market side, which is a part of investment banking and corporate finance advisory. And then the other side, which was kind of more pure corporate finance, mergers and acquisitions. I worked on a couple of BE deals and asset disposals, restructurings, a whole bunch of stuff. And that was only an 18-month period. So the learnings in corporate finance, mergers and acquisitions, investment banking is really super accelerated. You've got to kind of pull your socks up from day one and really kind of hit the ground and put your nose to the wall and really work hard from day one. But the skills you acquire is really fast tracked. So like to this day, my Excel modeling and the shortcuts I know and all that kind of stuff is attributable to my time in investment banking. So yeah, I mean, I guess the next obviously the next obvious question is then, why would I leave investment banking? And kind of go into, consulting after that, and go to the buffet and start eating at the buffet. Because I look now at some of my peers who are, principals in investment banking, doing pretty well. They've created, good careers for themselves. And yeah, I guess it gets back to like my personality and my ambition and my goals in life, isn't to work for someone forever. And your career trajectory within investment banking is pretty set out. Like, it's pretty hierarchical. You go from analyst to associate to senior associate to principal, and then maybe to the head of the division. Or within one of those levels, you can hop over to the private equity side, which is called the bar side, where you've kind of got a bunch of assets under management, and you look to deploy those assets, by buying pieces of or 100% of businesses. But that's also pretty defined, and I've got a couple of friends that have gone that private equity route, also doing very well, and all that kind of stuff. My curiosity and my kind of ambition is hasn't changed, and I ultimately want to own, run, start, something of my own at some point, and create something from nothing. So like that value creation, value capture type of thing. Whereas like the value capture of private equity is really like, I'm deploying 100 million rand, buying this portfolio of assets. I get 5% carry in the fund. Attend a couple of board meetings. Like, I'm not also throwing shade on private equity at all. I think it's like they definitely add a whole bunch of value in our ecosystem. It's just I feel more of an operator than like a board member. So I like the intricacies of strategy and execution, and thinking about marketing, and thinking about human resources, and thinking about logistics and hedging, and all the things that go into business, as opposed to like looking at an EBITDA number as a valuation metric, and not really knowing the blood, sweat, and tears that goes into making that EBITDA number. So yeah, I think that explains my kind of journey in articles through to the end of articles, where I signed on permanently in investment banking, and then subsequently left. But those are the reasons why I felt like I needed to get out of that environment, because at some point it kind of becomes too late, where your options start becoming limited, where you can only become grow in the investment banking field, or go towards private equity. And I didn't feel like either one was right for me.
Huge thing. Know where you want to go. I think in such spaces, if you don't know more or less the direction, not necessarily the destination, because I don't think that's really within our control at all. But if you don't know the direction, I don't think this is a right space for you, because it's like hyper competitive, it's high octane, it's fast paced. And when you don't know the direction you want to go, the problem with that is, you're brilliant. I know you. You're a CA student. You're going to do well in life, but you're going to go through the motions, and then you're going to get 15 years into investment banking. You're going to look back, you're going to say, no, oh shucks, I actually wanted to do X, Y, and Z. But now you've got all this money. You're making all this great money in investment banking. It's a very, in ways, cushy and privileged position. So it becomes even harder to break out into entrepreneurship. And I actually wanted to mention this idea that I heard from Jack Ma. So he said, in your 20s to 30s, find a great boss. Look for someone great to work under. I remember you had that great boss in the first year, which obviously that's such a blessing, but that's what you really want in your training years, your apprenticeship years. You want a great boss. And then you said in your 30s to 40s, start your own thing. And that's obviously when you're now creating something from nothing. You're building a business, you're creating value. Then, after you've created that value, you've made your money, 40 to 50, give back to young people. And like in my head, I'm like, guys, if you're scrappy, if you've got that entrepreneurial flair, there are old people out there with so much money. Like, just by the way, the world is getting older. Africa's the youngest actually in the world. So they're looking at you, African talent, with the hunger. But we're actually going to get into that discussion a little bit later around Africa, since you're like a group financial controller of an Pan-African company. But 40 to 50, they should look to help young people. And then 50 to 60 should spend time with their grandkids. It was just a really interesting sort of model of looking at how to spend your life, which I just wanted to share. You've also had great experience.
We could almost,
yeah.
Sorry, Lingo, I just on that point, you said 20 to 30s, find a great boss, and then 40 to 50s, give back to youngsters. You could also just reframe 40 to 50 as be a great boss. That could be the way to give back to youngsters, because I think that's what's lacking a lot in some of the businesses I've seen, is that leadership that actually they may have had great bosses coming up, but they don't pay it forward, and they just extract. So I think it's important to, if you've had a great boss, take those learnings and that gift and just pay it forward and be a great boss. Because I think if more people focused on being great bosses, I think the economy will take care of itself.
If you've had a great boss, be a great boss. That is paying it forward. I can tell you.
And if you haven't had a great boss, take those learnings as well, of what not to do, and still be a great boss.
Absolutely. I can tell you right because of, like the phrases. It's like writing, I don't know, it's the ultimate way to learn how to think clearly. I don't know if you've experienced that.
What, writing things down?
Writing to think, specifically.
Yeah, 100%.
I know Sam Altman, he's like the ChatGPT dude. He uses writing as like a thinking tool. He has like a little notebook, smaller one than this, but like this with the spiral spine, and he'll just tear pages and he'll just write. He'll just think. He'll just like, okay, what about this idea? He just uses his notes. But yeah, just a thought out there. You alluded to this, that you've also got now experience in e-com. Let's go into entrepreneurship. Yeah. Any lessons there for young aspiring e-com entrepreneurs, young aspiring CAs who are entrepreneurs?
Yeah, and I think you alluded to this earlier when you were talking about, the arc, where it's euphoria and then despair and then, people give up and all that kind of stuff. And I definitely experienced that in entrepreneurship. So before I started an e-commerce business, I dabbled in like creating like tech businesses, apps, all that kind of stuff, all on the side, and all pretty much, funded by, my savings and all of that. So, and most of 99%, or actually haven't been that many, but all of them did not work until e-commerce. And e-commerce did not work until my latest kind of product. The product before, or the product line before, kind of was okay for a season and then like died. And then you get left with a lot of stock that you don't know what to do with. And that was a good learning as well. The funding structure and how to get funding is also a very interesting lesson to learn of, why why do we need financial statements? Well, a lot of the time it's for us to get funding, and banks only fund people with financial statements. And then the next level is you can only get X amount if you have audited financial statements. So just starting and getting that track record of operating is actually an asset in and of itself, because you become fundable at some point. But anyway, the way I started was I wanted to try something, like try some kind of product that I found or that I heard about on a podcast, and I was like looking for it in South Africa, and it wasn't here. So I was like, okay. And then I looked at it overseas, and like I found like companies that were selling it overseas, but I'm like, the stuff looks like it's from China, and I can probably find it in China. And I found the exact thing in China, and I was like, well, maybe there are more people like me that would buy this product or that are searching for this product. So I spun up a web page, I think on Wix at first, and kind of advertised as a kind of pre-order thing to, like, I didn't take much risk. I was like, okay, like,
That's proper.
let's see if there's demand up here. Let's just spin up a website, spend a couple $100 rather than like tens of thousands, and see if there's demand. And I started getting inquiries and commitments and pre-orders. And then I brought in my first shipment. And then I started spending more on marketing and started getting more customers, and then started doing sponsorships and events. And I ultimately got, Dricus du Plessis before all of this, before all of his titles. I think it was before the Whittaker fight. We did a shoot with him, and it was really awesome to watch him train and all of that. So yeah, I mean, like learning about influencer marketing, learning about social media marketing, learning about third party logistics, and having a warehouse that I don't own, but my stock's there and it gets picked, packed, and shipped from there. And it's almost like an outsourced solution that has a whole bunch of different micro companies doing the same thing. So like learning about that, learning about, importing, the Durban port was in shambles last year in, I think, October, November. So I didn't get my shipment before Black Friday. And that was also like learning how fragile your business can be if you are only like one product line and you're reliant on supply chain. So like all these learnings that you may have read about in business management or economics or whatever, like they only really sink in when you have skin in the game, when you have money at stake, and you actually trade, like you're operating and you problem solving. So yeah, so that was like the first product, and then the second product, which is now like the whole business is pretty much structured around, and it's doing pretty well. That kind of started last year in June, where I got in samples of this product and started like playing around, and got a couple of people that I know to try it, and then got feedback from that. And I pretty much just asked people like, would you use this? And like tested the market before. So people think entrepreneurs are these insane risk takers and, all of that kind of stuff. I think the best entrepreneurs are the ones that mitigate risk to as much as possible, right? So they only pull the trigger once they kind of know that there's an addressable market that wants this thing, and this is the amount of capital, and capital can come from equity or debt capital that needs to be put into this, and these are the expected returns on that capital. So yeah, I mean, so that business is doing well. We've got a Shopify store, and we sell on Takealot, and yeah, learning as we're going. it's really cool, the data that comes out of it, and how people interact. And, if someone's added something to their cart and abandoned the checkout, you can recover that through giving a discount or incentive or whatever the case may be to recover that. And all these different tricks, tips, and things that you're only going to learn when operating a business. You're not going to some people I don't know if I'm going to use this term on this podcast. Maybe I will. Like mental, where they just read books and whatever, and do courses and never actually do anything. And they're actually doing the stuff and failing and figuring it out and problem solving. That is when you
learn.
really learn the lessons and acquire the skills. I couldn't have created the second successful product line without the lessons I learned from the first one. That I didn't lose money on the first one, but it wasn't like a great business. But I traded up, right? So now and I wouldn't say I'm in a great business now, but it's better than the first one. So it's like levels, right? It's almost like, I don't know if you know martial arts, but you start at a white belt, yellow, green, like you work your way up through your skills until you're a black belt martial artist like Bruce Lee or whatever. And I think it's the same in business. I think some people are super lucky where their first thing, they land on some incredible insight and are able to structure a great team, and their first thing is really like a success. I think that is the vast minority of successful entrepreneurs. I think a successful entrepreneur starts something, it either fails or it does okay or whatever, but they acquire lessons. Then they level up into the next thing and use a lot of those lessons from the first thing into the next thing. And the next thing may be their penultimate and, their 100, 200, 500 million rand exit kind of thing, where you won't have to you don't need to do anything after that. But if the second thing doesn't work, like to how you expected, or the addressable market was smaller than you at first anticipated, or competition is just too heavy, and there's no real barriers, so anyone can come in and erode your profit margins. Okay, so then let's move to number 3, and let's create a brand or something that's more defensible than number 2, and with a bigger addressable market, or in a different area, or whatever the case may be. And I think it's just really that process of upgrading that people, I don't think anyone talks about it enough. I'll give you, people look at Warren Buffett now and his purchase of Coca-Cola and Apple and these brands or whatever, and that he's an absolute genius, and that he's always been at what he is now at, however old he is, 95, 96. He started buying really terrible businesses, like terrible businesses, and learned those lessons, really difficult lessons over time, lost some money on some deals, or broke even, but he did not make the book. I think that I saw an infographic or something that he made 99% of his wealth after age 60.
Yo.
Okay, so that means I think he's worth probably pushing 200 billion now. What, 99% of 200 billion? So let's say he was worth 2 billion at 60, and now he's worth 200 billion. Right? So it's that compounding of hard lessons learned, and the key is to obviously learn those lessons and not continue with those mistakes, and admit when you're wrong, and have that pliability, because some people, they attach too much ego to the things that they do, and start blaming the economy or other people, or whatever the case may be, and not themselves, and they don't learn those lessons. And I think there are a lot of examples of that you will never hear about because they've never become successful. You're only going to hear about the successful stories because those people are learning from their mistakes, taking ownership, taking accountability, and moving on to the next one. And that compounding effect of learning is arguably more important to success than, just compound interest, for example.
There's 6 lessons that I've sort of mined from this, because there's a lot from your journey and a lot of, I think, value for any aspiring entrepreneur. The first one is to pre-sell as your first funding. If at all possible, try not even to get your family to help you with bootstrapping this thing. First,
Definitely don't.
pre-sell. Even before you have a physical product, even before you have anything, whether it's an informational product, whatever it is, see if people actually would like it. Like even with this podcast, I actually was chatting with a lot of people. I had like many conversations before I even actually started recording episodes. And it's yeah, for me, I'd already been reading about this whole pre-selling thing and whatnot. I knew I can't be starting something that people don't want to hear or see or buy. Or so if you are in business, understand that it's not a business if there's no money and no demand. Pre-sell, that's the first thing. The second one was, and this one's huge, I think. So, but I think maybe we would get it as CA students more than others. But man, there's no obvious lessons because we don't actually know anything because we haven't done anything. Build your books from day one. That will help you. Like just in terms of if you want to get that early seed capital. Let's say you've done the pre-selling, you're bootstrapped, you asked your mom, your dad for a little bit, and you've got something going, and now you're like, next stage, we just need some extra venture capital push. If you don't have books, it's going to be a problem. The more historical information you can have, the better your case in the deals room. So make sure that you have your financial statements and your books ready. That's the second one.
Yeah, I think on that point, like if you have your records in check and you've been operating for a number of years, you won't have to take venture capital or an equity check, which is expensive, and you're giving up a portion of your future earnings. You can get debt. And I think people don't like the sound of debt, but debt is way less expensive. And if you have proper books and a track record, I would recommend debt before selling a large portion of your business for equity, because especially if you become an entrepreneur to be your own boss, you don't want to report to venture capital guys and or private equity guys. So yeah, I just wanted to throw that in there.
That's huge, because I think like now when we're getting back into financing, topics we learn all day, but when we're applying them, also pay attention to control. So the UP, we have like the 3-pronged approach where we look at return, risk, and control. So yeah, you'll be taking on more risk, but at the same time, and I loved what Warren Buffett said around diversification. So he I'm sure you've probably heard this, but he said diversification is a hedge against ignorance. And I was like, that is so huge, because truth be told, these guys up in these huge asset managers who are allocating billions of rands, right? They don't experience the same risk that you do because they know a lot more than you do. They have access to proprietary knowledge and data that actually de-risks a lot of their decisions. So a huge thing to quote unquote de-risk, and you mentioned how the best entrepreneurs aren't the big risk takers, is to know more. Get more information, but also don't get into that procrastinatory paralysis by analysis thing. It's getting knowledge while doing, so that you are reducing your risk in that particular space you want to operate in. So huge.
100%.
Make sure you're informed.
Yeah, I think Buffett's partner Charlie Munger called it diversification. He said if you only have one asset that is, printing millions and millions of rands per annum, why would you go and take those millions of rands and diversify into potentially worse ideas or things that you don't have control over? Like, let's say you own a small or medium-sized manufacturing business, let's say toilet paper business in South Africa. Like, okay, what's going to disrupt toilet paper? I just don't see anything disrupting toilet paper in the foreseeable future. Why would you go sell 50% of your toilet paper business to put that capital in high risk tech because of for the sake of diversification? It just doesn't make sense. At least to Buffett and Munger are arguably the best investors of all time. So I try to follow their wisdom rather than the guys that are sitting at asset managers. Granted, they have access to a lot of proprietary data and Bloomberg terminals, but it's not their money that they're managing. So I think it's also an agency thing where they're actually not really taking risk because they're not taking personal risk. So yeah, I just wanted to add that point.
That was also big. Because it actually gets to an idea that I heard from Alex Hormozy. So he's also a follower of the great Buffetts and Mungers. He's an entrepreneur. He's a guy that I see on the internet, but he's an entrepreneur and investor.
I've read his books.
Have you read all of them?
I read $100 million offers.
Yeah.
And I think I listened to $100 million leads.
Yeah. I still haven't read Leads. How is it?
Yeah, I think it's good. I watched the build up to and the launch of that book.
Yeah,
and
huge.
That was a lesson in and of itself. Like, it was fascinating how he demonstrated, how to sell that book through generating millions of leads through that funnel in order to buy the book, and then creating offers around it. Like, he pretty much demonstrated all his philosophies, like, through that marketing funnel of through the launch of the book. So I thought that was more fascinating than the actual content of the book itself.
Sure. You're actually getting me thinking. I've got an idea that I'm not going to share in public, but wow. He said that this is one of his money rules. I watched this one video, and it was like one of his rules on money and investing, how to make it and how to keep it. The rule was, before you learn how to make money before you learn how to make money. And I was like, damn.
And that's a mistake I've made in my past, where I'm like, wanting to do the sexy things of asset management, investing, learning the markets and whatever. If I've got 10,000 Rand to invest, I can make 100% return, and I've made 10,000 Rand, where I could have just worked at McDonald's on weekends and made the same 10,000 Rand, right?
Yeah.
So it is completely right, and I almost want to emphasize this. Like, you've got to acquire the skills to make money. You yourself on asset, and the more you invest in education and skills acquisition, and the higher your earnings become, like, there becomes a tipping point where you are earning so much that is the appropriate time, and it could be earning so much through either your job, if you're a high paid executive, whatever, or through a business you've created. But there comes a time where the marginal utility of learning more and earning more through your career or your business, whatever, is lower than in learning how to make money. So how to invest, what to invest in, all that kind of stuff. So I think us as CAs may have, may be looking at it like sexy to, learn the stock market and how to invest. And I mean, I do a bunch of investing still because I just love it. Like, it's more of a hobby for me than anything, but I don't have I don't have 100 million rand to put to work, and then like where a 10%, 20%, 30% return is meaningful, right? Where when that tipping point happens and those percentage returns become meaningful, that is where you should start focusing your effort. So if you've got 100 or say 200 million rand in capital that you've made over time through businesses or your job or whatever, it must have been a really good job if you've made 200 million rand. But if you're like a high-powered executive and you've got 200 million rand in capital and you can generate a 20% return on 200 million rand, well, that's 40 million rand, right? So the opportunity cost of making, can you generate 40 million rand in a year in your career or your business? And if the answer is no, well, then you should be focusing all your time on investing and really going down that rabbit hole and making better investing decisions. So there is that tipping point, and most people will not even reach that tipping point and should not even think about it until you've acquired as many skills as you possibly can and have generated as much income as you can for yourself.
You shouldn't think about it, I think, like until. So if you just surround yourself with consummate, like let's say when you get to the family office level, right, where you can now start deploying capital, you should probably still keep it within your expertise. So like, let's say you made your millions off of tables, also, let's say furniture manufacturing. You should probably focus your portfolio around furniture manufacturers. Like, really, I don't think there's many points at which we should be quote unquote diversifying, because let's say you make millions in furniture manufacturing. What about the other manufacturers? Have you consolidated that industry? Have you monopolized it?
Yeah.
Like, there's still so much opportunity in the space, but then there's competition act, which is a whole. But that's why you employ lawyers, so that you can be able to navigate these spaces informed.
Yeah, 100%. I mean, you could buy out competitors and consolidate the industry. You could vertically integrate by buying out suppliers and owning owning the forestry company that supplies your wood and whatever the case may be, and that out competing from price perspective and input cost perspective all the other guys through vertical integration. There are so many ways, but to deploy that capital, but it all needs to be done with a opportunity cost hat on. And I think we've all learned about opportunity cost from our first year, but no one really like learning about it and actually practicing it literally in like daily life. Like I'll give you a silly example. If my opportunity cost of cooking lunch at work, like for work, like if I have to cook, and listen, like this may not be for everyone. Like a lot of the financial, the personal finance gurus will say like, yeah, you've got to make your own lunch and don't buy coffee and all that kind of stuff. If I have to take half an hour out of my day to prepare lunch for the next day or whatever the case may be, like what is that hour, like what is my hourly rate, right? And if my hourly rate, if I say that my hourly rate is super high, like, and I think Naval Ravikant talks about this, like set your hourly rate super high so that you don't do these kind of low level tasks. And again, this may be controversial to some people or whatever the case may be, but I would set my hourly rate at like 5,000 Rand, right? So I'd rather than just like order Uber Eats for lunch every single day at work, because it doesn't make sense for me to spend that amount of time making my own lunch. And that may be controversial, and I'm happy to engage further on that. But I
This
think
is not financial advice, by the way.
When you start thinking that way, where you kind of protecting your time and you're identifying very high earning possibilities to spend your time on,
Mm.
that is way more, like that is how you get there. Rather than like, you know, layering on all of these obligations and adulthood things that you think you have to do, as opposed to just give away some of your salary to outsource it. Like whatever, like get Uber Eats, get like go out for dinner, like whatever. Like if and I encourage people to go listen to Naval on this topic as well, because if you are caught up doing all these tasks that can be outsourced, and Uber Eat, preparing food or lunch, whatever is a good one. If you can just outsource it and it frees up, I mean, how much time would it free up? Let's say on average, let's be generous and say on average, I need 30 minutes to prepare lunch per day. So per week, 30 minutes times 7 is 210 minutes in an hour. I think that is, is my math correct? Yeah,
No, it's right.
210
It's
minutes.
right. I know we need calculators as accountants.
Yeah. So it's like 3.5, 4 hours. Like, okay. Like, so if I value myself, if I value my 4 hours at 5,000 Rand an hour, like I'm saving 20, like, and I get Uber Eats every day, call it 100 Rand per meal. So 700 Rand a week versus 20,000 Rand a week. Like it's a no-brainer trade-off.
Yeah. Like there's no honor, and I think that's the important thing, because there's this romanticized, idealistic, which it's not even idealistic idea of adulting, that you have to cook for yourself, that you have to clean for yourself. Like people have this like crazy pride for it, but guys, I promise you, like, what if you could pay someone to do that, and then you could have pride over the impact that you're making in your business, or the impact that you're making in your foundation if you have an NPO, or the impact that you make in your children's lives, because now that frees up more time to spend with your kids, or frees up more time to spend with your brother or your sister or your friends. Like those are the things that we need to seek pride from, not washing a dish. Like
No,
you know.
exactly. And I think look, if you can slip down the unfortunate hole of laziness if you follow that route, right? You have to do it intentionally. Like you have to like apply opportunity cost in your life, and you'll do things intentionally. But if it becomes like I order Uber Eats every day, but don't find I'm not productive in those 4 hours per week saved, well, then correct. Like then the personal finance gurus are right. You should probably just start cooking for yourself, because ultimately, like, that is actually a better use of your time, because you're not doing anything else with your time, right? So your opportunity cost is actually now saving 700 Rand a week, because you aren't, you lazy watching Netflix as opposed to doing stuff. So you're making zero, and you could actually make or save 700 Rand a week. For example, obviously these numbers are all fictitious. But if you're actually using those 4 hours for, starting a side project or business, or upskilling yourself in some way that can or finding, something like doing that extra analysis at work where, and finding some place where you can save work money and preparing for your next increase or bonus conversation, like that's worth a lot of money. And that's worth, outsourcing, like, silly things like cooking and cleaning and all of that. And it may sound funny and may sound, too direct. And I think we spoke about this at the beginning, where like sometimes I'm not politically correct in the way I say things, but I think the principle of protecting your time and thinking about the value of doing certain things versus the option and keeping optionality to outsource them, I think that's a good principle to take away. And everyone's different, and I'm not prescribing any kind of course of action. I'm just kind of prescribing maybe a mental model of, if I need to, if I buy, a bra from builders that needs to be assembled. I made this mistake a couple of weeks ago. I bought a new bra. It took me 6 hours to assemble this thing. I'm not even joking, because I kept doing it wrong. Like, I didn't know how to do it, and like I was trying to follow the instructions, and it probably would have cost me 1,000 rand or even less to get someone to put it together for me, and that I should have done that. And those 6 hours could have been spent, with in a high value way. And I'm not just talking money, like spend time with your wife, your family, friends, or whatever the case may be, or tweaking your business, responding to customers, researching. So like, it's all about valuing your hourly rate and saying to yourself, okay, if I were to do this activity, how long do I think it will take me, and what value do I put on that, right? And a lot of the time there is a value on that. Like, society has put a value on that. Like a Uber Eats lunch is whatever, 100, 150 bucks. Someone to put a bra together is probably, between 500 and 1,000 bucks. Like a haircut. Like, I don't cut my own hair. Like, I probably could, neaten myself up every couple of weeks, but like it's not my thing. Like, I think Jeff Bezos talks about, and it's also applicable to business as well. You should only do things that make your beer taste better. Everything else you should outsource, right? So you think Amazon, I don't know, does their own legal work? Like, do you think they own their own law firm? No, like they're. Like, wow, you have like lawyers on retainer, like that.
So if you even
think about
vertical integration, you've got to think about what is it in terms of the actual beer. So now our business is tasting of beer, right? The taste of the beer is why people buy the beer. Like we could get into all other ways. So like Coca-Cola, their main thing is actually not the drinks; it's actually their social and relational capital. It's their distribution channels. But like, it depends on whatever your business is. Let's say it's the taste of the beer. If the lady upstairs who's sweeping the factory, you right, is she's sweeping the factory, and you employ, we employ a company that's a cleaning company, and you want to say, no, in order to reduce that cost of the cleaning company, we're going to vertically integrate our cleaners.
You're going to bring it in-house.
In-house cleaners. Relax, dude. It's the same even with like your goals. I think it comes back to that whole diversification thing. Because when you start doing other things and you stop making the main thing, you know what's going to happen to the main thing? It's going to become worse. And like, we just lose focus. Like, it's even this whole career thing. Like, people get lost in the career. They don't make values-based decisions, and now they've wasted 10 years away from their kids, even though they actually really value time with their family. Stuff like that.
Yeah.
But I actually want to finish those entrepreneurship lessons. There's still a few that we have to quickly finish, and we still have to get onto some other stuff as well. So the third kind of takeaway from your entrepreneurial journey was you need to be a learning machine, eh? You need to learn at every level, at every stage. And like, I like Alex Hormozi's definition of learning. It's same conditions, different behavior, not just knowledge. That's not learning. That's just, as you also mentioned, like, that's more mental. That's not actually having experiences and taking that information in and having a different behavior because of it. So it's very action oriented, but you have to be a learning machine. And then added to that, you need to have skin in the game. I think oftentimes, especially like in a school scenario, mostly for even people without, funding obligations. So sometimes people are on bursaries and they have to make sure that they perform. But most people aren't. You'll go through life not really understanding that every day has stakes. Literally every moment and every hour, there's always that opportunity cost situation, but also there's literally the wastage of an hour, the wastage of the time that you're not guaranteed. You could be taken out tomorrow,
Yeah.
and skin in the game makes you make sure that, okay, if I don't do something in this venture, I'm going to lose. And it wakes you up in a way. A fourth one
Definitely.
is when the business isn't growing, you're growing. You got to look at yourself as the asset as well in entrepreneurship. When the going gets tough, that's the time that growth happens. That's the time where, it might be that disillusionment where you're down there in the valley of despair. That's where you've got to dig deep. It's where your character is built. It's not built in soft times, it's built in hard times. And yeah, just understanding that you are the asset, not necessarily the
Yeah.
business. Yes, the business is important, but really you're the asset. And the last one was humility, eh? Yo, this one's huge. Leaving your ego at the door. And I think it's something that people have to really get through, because I don't think if you're very egotistical, entrepreneurship is not for you. Like you have to listen to the market, eh? And if the market says no, sorry, chief. And even if this is your baby, even if this is your mom said it's amazing, tough. If no one likes it, no one likes it.
Yeah, I
Sure.
think it's this kind of tug of war
Mm,
between what the market wants and
mm,
what you want to put onto the market. So it's almost like the thought experiment or the question. Let's say you're a master sculptor, and here's a block of marble, and you're going to sculpt it. Now the question is, are you uncovering something that was already there, or are you
mm,
enforcing your design and idea of the statue that you want to create? So, did Michelangelo? I think it was Michelangelo. Did he uncover David? David was always in the marble. Did he uncover it? So, did I uncover something that was always in the market, a desire, a gap that the market wanted? Or did I create something? Did I have a vision in my head and said, I think humans will desire this and I'm going to enforce it onto the market? Or is it somewhere in between? You know,
mm,
like there's a bit of market need, want, desire,
mm,
but there's also a bit of my personal flair that I'm enforcing onto the market, and this is how I think it should be. So that's also
mm,
like an interesting thought experiment to do. And I think it's a spectrum again. I don't think it's binary. I
mm,
don't think it's either or. I don't think it's either David was always in the marble, or Liron or Michelangelo created David, willed his creation onto the marble that enforced David. So I think that's also a good thought experiment. And but I do think the second option is way more risky, like enforcing
mm.
your
Yeah.
idea of a product or service or whatever that people want. It's more risky, but it's also way more lucrative. So it's like Peter Thiel talks about 0 to 1 and creating new things and categories, like creating new categories that never existed and capturing that whole new category and the economics around that. You will become a billionaire if you create a big enough category. Just like, Zuckerberg, social media, like he captured that before it existed. The first one is like uncovering the David in the market is really just through market research, surveys, asking people,
Mm,
well, what do you want? And then creating a
mm,
service around what they want that fulfills that want or need. And I think we've been taught that option A, that, uncovering the market desire, needs, wants, business management 101. We were never taught the option B, which is more of the kind of high level Steve Jobs kind of mystique of creating something truly extraordinary and special, or a category of its own, and capturing that category. But I think most of the time it's somewhere on the spectrum in the middle.
Do you think, because I agree. Do you think vision can be taught? Do you think vision can be learned instead?
I don't know. Honestly,
Mm.
I don't know, because it's so difficult to answer that, because I only know my own experience of the world, and my perception and how I learn and how I perceive things, and how I come up with a million ideas a day, and most of them are horrendous and stupid. But I think that is how it's supposed to be from a vision perspective. You're supposed to just throw stuff at the wall, and most of it is just idiotic. But there's one thing that's just super smart, and you get really excited about, and then this becomes traction because people want it and are excited about it and whatever. But in terms of teaching it or learning it, I think you can learn the frameworks and the skills of how that inspiration takes place, by fostering curiosity and fostering a way of being, that is always curious. And when you go into a Woolworths, you're not just shopping, you're actually looking at, okay, they're actually using these RBM scanning machines. I wonder, that market, or how does that work? Or looking in the Woolies fridge, oh, it's the South African company that actually manufactures these fridges, and here's the name and whatever. And I wonder what how many fridges are in all the supermarkets in the country, and what that total addressable market is. So it's all these things, fostering that curiosity, that doesn't switch off. And I don't know if that's some people, my wife, doesn't know if we don't know if it's healthy or not. And I don't know if that's how I'm wired, or if other people are wired I'm sure a lot of other people are wired like this. And I think you can rewire yourself through brute force. But I guess, I don't know why. I think curiosity is really the common denominator. And I think you can foster curiosity through reading a lot, through listening to podcasts, through finding things interesting, not just listening, learning about business, learning about biology, learning about evolution, learning about psychology, and things really start to make a lot of sense, and you just start to become more curious. And yeah, I think so. I think it's a spectrum also. I don't think it's innate. I don't think you're born like this. I think some people may be like Einstein, was born wondering about, the world and how the world works. And I'm certainly not like that. But I don't think I was born thinking about how business works. I don't remember being a child thinking about, how how cool it would be to own a petrol station. I just didn't think about that, But I think so. I think to an extent it can be learned, but I think it takes a lot of time, and I think it's really just about fostering curiosity, and then over time it just doesn't switch off. So it's also wanting that thing.
I feel like vision is out of your control, in the sense that because I also have 1,001 bad ideas, But then there'll be that one good one, like a podcast for aspiring CAs. Hey, there's this one. But
Yeah.
I
You're up and
think,
down.
yeah, I actually do. I have an inspiration capture system. So I use Google Keep, where I capture like my rough thoughts and have like a bank of quotes. Actually, some quotes that we're gonna go through are from you, to be honest, because there's some crazy quotes on that LinkedIn of yours. But I have like rough notes there, and then I have this was where I sometimes journal like particular thoughts from experience of my life, and also obviously like my podcast preparation sheet. I have a bunch of places where I know I have ideas. If I go to that page, I'll have it. And then I have like a system where I write mini essays on topics that interest me. So like, for an example, like you mentioned just now about, hey, you see this fridge is here, and that fridge, it's in the same shop. When you go to Woolworths, it's there, but when you go to this restaurant, they use a different supplier, whatever. And like sometimes those little ideas will be like writing worthy. So I'm also trying to build my writing skills through that. Um,
Yeah.
but yeah, I know you have a second brain system as well.
Yeah, actually, I read that book, Building a Second Brain with the Para system and all of that kind of stuff. Can't remember, Diego, someone.
Diego
I think
Forte.
it's I think it's vital. Yes, yes. I think it's vital to revisit like certain tweets and things that you bookmarked, and LinkedIn posts or um, you know bookmark them so that you kind of don't lose them, and revisit them at some point because your experience of reading something at another time is totally different to like the first time, and it's just funny how
Mm,
things are almost like you won't experience the same feeling reading a book a second time as you felt it the first time, and you may have missed some certain principles because you hadn't experienced that in your life yet, and then you go back and read it and you're like, oh my god, that makes so much sense. But yeah, I
yeah.
mean, most of my business ideas just go into my phone onto notes, and I mean, I can pull one up from um yeah, I'll read you one from Monday. So this is I'm not even joking. Like this is a idea I came up with on Monday. It's called Lessons Through Stories. So what? A collection of real life stories that
Mm,
are incredibly interesting, funny, whimsical, exasperating, and emotional, with key lessons and takeaways. How? Collate from books, research papers, official declassified documents, etc. Then why? Empirical evidence shows that people learn from interesting stories. The Bible is really just a series of rules or lessons told through stories. So the total addressable
mm,
market is the English speaking world. And then
yeah.
distribution, one story per week on LinkedIn needs to be as bite-sized as possible to go viral and attract followers. Then launch weekly newsletter where the story is expanded further, with more commentary, lessons and interpretation, and that will be a paid subscription, no ads. So that was like, yeah, that was on the 2nd of October at 8:51 a.m. I was probably in an Uber on the way to work.
Sure. I don't have see a lot of my ideas. I think my entrepreneurship ideas, I don't have a lot of them, or rather, I don't capture them often because I think, yeah, just being in school, I'm thinking more of school stuff. So I'm
Mm,
sort of thinking
mm.
about
No, and
getting through the
I think,
system.
yeah, I think it will come with time and with being in the business world and the working world. Business ideas will start coming. Like, I don't think I was having any real business ideas in varsity.
Okay. Okay, calm. Whew.
And
Then
I've
okay,
got one
that's all
today
of
as
those.
as well that I wrote down, but I'm not going to share it because I think it's a winner. So I think I may actually do it at some point.
Okay. Okay. Yeah, that's important. Not don't share the idea till it's too late. That's the thing about good strategy. Good strategy, one common denominator of it is everyone only finds out when it's too late. That's the sign of a good
Yep.
strategy. Um,
Yep. Exactly.
what are some useful, you mentioned earlier, you mentioned the word mental model, right? What are some of the most useful mental models for you that you've used? Like, philosophical, financial, decision making in all realms. What are some of the most useful ones?
The reciprocity principle is probably one of the most powerful principles that you can come across, where it's reciprocation between humans. So if I do something for you, you will feel like you need to do something for me. And you can see this throughout the business world. This is why we have, we invite our customers to golf days and spoil them and give them gifts with our logos on and all that kind of stuff, because they feel like they've received value. They've received something from us. They end up liking us because of that. And when they need a certain service that is in our wheelhouse that we provide, that we are the likely ones to get that business because of reciprocation. They feel almost indebted to us, and there's empirical evidence around this. I don't know if you have a car or whatever, but you probably come across window washers in South Africa, and at a robot, and someone starts washing your window, right? Why do we get so irritated or so uptight about it? It's because we don't want to receive something that we didn't ask for, right? And then you feel obligated. Like it's almost like an accountant where there's been a debit, but there's no credit, right? So this guy's washed my window. Like he's done something for me now. Like he's finished washing my window. Like I told him no, but now he's just done it. And now there's been a debit, and now I've got to create a credit. And that is why, it's so ingrained in human nature, this reciprocation principle. So I think that's a great mental model to keep in mind, both from an influence perspective, like how do you want to influence someone? You provide them some kind of value or perceived value. And then when you ask them for something down the line, they feel like they have to do it for you because you kind of made those deposits over time. And the reciprocation will make them immediately, or at least influence them in the right direction to complying with your request. So that's one. Another one is, liking and hating tendency. So humans are kind of binary, and we either like things or hate things. And we're very influenced from a mental model perspective. We're influenced by people doing or saying things that and if we like that person, so if we find them likable, we're more likely to listen to their advice or to their recommendations, even if they aren't an authority on the subject. And there's a good story about this. Marketers, I think a marketing agency used some doctor from a series, like a Netflix series, to advertise some over-the-counter medicine for X whatever treatment. Now, obviously, the dude's an actor. He's not a doctor. But because we perceive him and we like him and we like his character in the Netflix series, he's got some authority over us because he's a doctor in this Netflix series and he's a likable character, and that drove sales for that product. So that tendency of just taking things at face value that someone that you like says, or rejecting things at face value because someone that you hate said it, that mental model, you've got to take a step back and separate fact from fiction from the person. And it's very difficult to do that. So And mental models are hard to keep front of mind in certain situations, but I think they very important to bring to the front when there are consequential decisions that you need to make, like personally or in business.
The one that
Another
comes
mental
to my
model,
mind is the Bezos Two-Doors mental model. I don't know if you've heard that one.
yeah, I think I may have written about it on LinkedIn as well. Reversible decision making, right?
Yeah.
So like so Bezos wanted to make decisions pretty quickly when you're building and running a company. You can't have analysis paralysis and be 100% sure, if the decision is going to be right or wrong. But
Mm.
if it's a reversible decision, meaning it's not going to cost much time, effort, money to reverse that decision, then you should make it quicker than a non-reversible decision. And we saw there's plenty of examples like this that had huge business impacts in the past. I don't know if you've read about the new Coca-Cola, the new Coke formulation that came out, I think it was in the 80s or 70s. And they came out with with new Coke based off of taste tests. So they did a survey with a bunch of people, like new Coke versus Pepsi. And a taste test is like a shot, like very small amount of the liquid. And people indicated that they liked the new Coke better than Pepsi. So then they rolled out new Coke throughout the product lines, and sales, like, it almost destroyed the company because they didn't take into account that this it was a lot sweeter. So because they were taking like a taste of it, that initial taste was like nice or sweeter, but people don't drink Coke like that. People drink Coke in a 500 ml bottle or a 350 ml can, and it was like it was too sweet in that serving size, and people stopped buying Coke and they switched, and it was a very, very big business blunder that they made, and then they switched back to the old formula, and the rest is history. I mean, it was a great buying opportunity, and maybe Buffett did buy some more shares. I don't know if that is true, but yeah. So that's an example of a very difficult to reverse decision that Coke made, and they paid dearly for it. And yeah, so I know I've definitely heard, like, yeah, I like that framework of decision making as well, where if it's a reversible decision, you can make it way quicker than if it's a non-reversible decision. And yeah, trying to
I
think
also
of
remember you
some other
wrote
useful.
about thinking in bets. Can you explain that?
Yes. So I read a book by Annie Duke, who was a professional poker player. And there are quite a few very good mental models in that book. I think a book was called Thinking in Bets. So that was like the overarching principle is really just working out the probabilities of you being correct in any situation given the information that you have at hand, right? So for example, let's say you've done some market research and you kind of 80% sure that this product is going to do well in the market. Like, that is a bet you should take, because 8 times out of 10 you're going to make money on that. But if the market, you spend some money on market research and 10% of people like what you're doing or whatever, like, you probably shouldn't take that bet, because 9 out of 10 times you're going to be wrong. So or you're going to lose money 9 out of 10 times. So it's really just taking a probabilistic view of things, and weighing up pros and cons, and taking actions based on your assessment of the probabilities of the outcomes. Another great model from that book is called resulting, meaning your decision-making process should be divorced from, or should be evaluated on its own merits versus the outcome that came after the decision. So I don't know if you know poker, but she gives a story of someone who had won a couple of times with like a really bad hand, 7-2 offsuit. And his mental model was like, he's a genius because he won with that terrible hand. So he resulted his decision to play that hand because of the outcome, right? And she's saying the best poker players only evaluate their decision making divorced from the outcome of that decision. So given everything that you have, all the knowledge or all the data you have, regardless of what the outcome was, all the data you had at the time, did you make the right decision? Right, so that is weighing up the odds of your hand versus how many players are in the game, the bet sizing, like but like maybe we can find an example outside of poker. She gave a couple of examples. I think the one.
Let's look at passing a test. So, did you do the work throughout the year? Did you attend all the lectures? Did you attend all the tutorials? Did you do all of the content? And did you do some past papers? Now, the paper comes, and let's say they throw a curveball, because they like to do that sometimes in BCom accounting, and you don't get the mark that you aimed at. So you quote unquote failed. Is that a good one?
Well, I think yes and no. I think with exams and stuff like it, there's less uncertainty around what you should do in order to pass a test. Like you should do as many past papers and learn the material. Like you kind of know what to do. But I think when there's a lot of uncertainty around decision making, and maybe war is a good example, right? Like there's a lot of wars going on now. I'm like, maybe it's like the calculus that these leaders weigh up based on the data that they have at that point in time, regardless of the outcome, whether, civilians were killed or they marched into straight into the enemy's like hands and like they were ambushed or whatever the case may be. The decision making needs to be divorced from that. So you can't say this general made a bad decision to go this route because they were ambushed, right? If the general had the data at that point in time that there was enemy troops in a certain geography and then still took that decision, well, then that was a bad decision. But if he took that decision, given the data that he had, that a certain route or a certain way of warfare was the kind of made the most sense at that point in time, given the uncertainty of war or and you can extrapolate this in business as well. There's a lot of uncertainty. You don't know what your competitors are doing. You don't know what, the economy is going to be like next year and all that kind of stuff. So you don't know really how much, we saw this with all the solar guys who brought in tons and tons of shipments of solar panels, and then load shedding stopped, right? So decision making wise, they were basing, I need to stock up because load shedding is perpetually bad and we've got a lot of installations, installation backlog. So I'm going to bring in hundreds of millions of rands worth of product because that makes sense. That's the data that I have. Load shedding stops. All these guys go into business rescue. You can't say that they made bad decisions because they're in business rescue now. So I think that's actually a great example, right? Because and that's an example of resulting. You didn't end up in business rescue because you brought in hundreds of millions of rands of stock. You're in business rescue because you were solving a problem that existed, that poof does not does not exist any longer. Load shedding is solved for whatever mysterious reason, and now you're out of business. So
Whatever mysterious
like the
reason, very
bankers and the
interesting.
funders and the lawyers and even the founders of those businesses themselves who are now sitting in business rescue, you cannot look at them and say, well, you're a terrible business person, you made a bad decision. Because if I was in that position and I was printing money with all these solar installations and I was forecasting load shedding to be around for some time because of how bad it was, and like it didn't make sense that it can be turned around so quickly.
Yeah.
Well, I would have done the exact same thing in that position, and I think it's unfair for resulting to take place of you are in this position and therefore you made a bad decision previously.
Interestingly, on that load shedding thing, I've heard an interesting perspective that the reason why load shedding it's been alleviated now. I'm saying alleviated because I don't know if it might come back. You never know. Although there is a lot of talk in the media, chairman of ESCOM has explained that it was because they fixed a lot of the mismanagement there and whatnot. There's another angle that I'm like, that kind of makes sense. A lot of the corporates are going off the grid, and some are even planning to leave South Africa. And so there's a lot less corporate energy consumption pressure, which is that's the bulk. Like we always, I remember in DSTV, you used to see these like reduce, reuse, recycle, and like these little videos where they like close the tap so that the fishies can, so the fishies can survive and all that stuff. People don't actually consume as much as we think. Although it is important to do your part, recycle, close the tap, don't be wasteful. Like I think I forgot when I saw this, but it was like something like 10 to 20% of water consumption in a particular period. So don't quote me on this. You can go and check it out. I'm sure like more or less there was from household use. 10 to 20%. So then where's the other 80% where the fishies can actually swim? It's agriculture. It's industry. It's all these big businesses. So it kind of makes sense that now that these guys are going off the grid, we can have power for lulls. But now in the macro, in the long term, don't know how that's going to look. I don't know, man. I don't know.
Yeah, I'm also like unsure. I think there probably is quite a lot of data that we can look at and like look at consumption data. I'd be surprised to see a drop off in consumption, just given, I mean, the economy's in a good place right now. And I think a lot of it's due to gold demand in the mines, being able to operate with no load shedding. So like the rand strengthened quite significantly. But yeah, I mean, it's still a mystery to me as how, like, I mean, everyone was saying before elections, like this, like load shedding has stopped because it's an election ploy. Well, elections are well past us and we still have no load shedding. And I'm like, well, how can they just have switched it off like that? Like it just, yeah, it's just incredible. And I'm very skeptical around the reasons that Mteto Nyati gave as a chairman that, we just cut red tape and whatever. Like, then why wasn't it like if it was that easy, like, yeah. Anyway, I don't know enough about the inner workings of ESCOM and all that kind of stuff in the politics, but it just, I mean, the economy and the country suffered immeasurably during that period of time, and to have been able to rectify it so quickly, it's just like, I'm kind of like gobsmacked at how it was rectified, and I'm not complaining because let me tell you, like, it was, it was terrible, and the pollution and the diesel and the generators and the noises, like the noise pollution, never mind the diesel pollution, was just, it was just insane. But yeah, I think that was a good example of that mental model of resulting. And then I think the final one I want to share with you and the listeners is Charlie Munger's mental model of inversion, meaning you should invert any decision or anything you're considering, invert it, and you'll arrive at the answer. So a lot of the time we torture ourselves of like how to do X, Y, Z. Like, how should I do X, Y, Z? And a lot of the times the answer actually lies in how to not do X, Y, Z. So if I were, a good example of that is, if I want to know the list of things to do to be a good husband, like how to be a good husband, like I'll come up with a whole bunch of things, and not really know the weight of what to put on each item, and like it becomes almost like overwhelming. Like there's like no end point in things of how to be a good husband, right? But to be a good husband, there are a few things you need to avoid. So if I write down 10 points of how not to be a bad husband, or how to be a bad husband, like how would I go about being a bad husband? You know, I would come home drunk every day. I would, abuse my wife. I would, be a financial mess. I would not help around the house. I would swear and shout and scream and be a misery to live with. Okay, so now we've got a framework of what I'd mansplain, I'd complain all the time, I'd, no, tell her she looks ugly or whatever. Like, it's pretty easy to write a list of what a bad husband would be. And in order to be a good husband, guess what? Just avoid the bad stuff. And you're 99% there. So that's that was Charlie Munger's inversion principle, and he took it from the algebraist, I think his name's Jacobi. And a lot of the time when you're wrestling with a hard problem, the answer actually comes about by itself through inversion. And I think he gave the one example of how to make how would I make the Indian economy great, or how would I make India great? Like, you can rattle off 100 different things and like it will just overwhelm you. But then if you say, how would I hurt India? I would, I don't know, raise taxes, make the interest rates, raise the interest rate, do this, do that, whatever. Like, there's a sorted list of things that when you invert it, to hurt someone or to be bad at something or whatever. And most of the time, to be good at that thing is to avoid all the bad of that thing. Like you're 80 to 90% there. That the Pareto principle, by avoiding, certain things that, the good bad husband example, by avoiding being, those principles of being a bad husband, you literally 80 to 90% of being a good husband. And then there's a couple of things that you can sprinkle in there to get to 100%. So I think that's a fantastic mental model, and you can apply that to literally anything. If you're ever wrestling with a hard decision, applying that and inverting it would be great. Like, I mean, if I was a student thinking about what to study, right? Like, what should I Liron, study in order to be financially independent, and successful, or upper middle class or whatever in South Africa? Okay, so that is the problem statement. Now, if we reverse the problem statement, is okay, Liron, what should we do in order to be a bum, dependent on other people, and not financially stable? And I think we can come up with a lot of different things for that. Right? And then the answer will come out of that. So I think people I think that's probably that, and reciprocation. Those are probably my two favorite ones. And the two I most use. Reciprocation is mostly from an interpersonal, relational perspective and like business, because like if you understand how people operate, and reciprocity is literally all around you. Like I gave the example of the window washer in South Africa. Like that's pretty much unique to South Africa. I mean, I've traveled a bit, but like I haven't seen window washers anywhere else. Like that's pretty unique. But there is reciprocity is literally everywhere you go. It is a universal human nature trait, and if you understand that, you understand most of what drives human nature and how to influence them. And then inversion is more of a decision-making framework. If you touch it, and maybe that, that goes into the Jeff Bezos non-reversible door decision, then I would kind of layer inversion over that, because I want to understand, okay, how not to do something will show me how to do something well. So I think
reciprocity, inversion,
even
resulting, thinking in bets, and the two-door method. There's a lot that guys can also research. I think there's these are really reciprocity is a big thought, and it's like huge to understand. I think it's like really valuable to understand.
Yeah, and I think I wouldn't go down the rabbit hole and try and acquire 100 mental models right out of the gates, right? I mean, you wouldn't go into investment banking and try and learn how to do every single financial model, from leverage buyouts to rights issue to this. Like the principle should be to kind of master one and really like learn it, like implicitly understand it, so much so that like no one else has spoken about window washers and the reciprocity principle, but I have. Like that's because it's so ingrained in me, so I can recognize it like in the world and like see those examples in the world. So like it is literally ingrained in my brain. Like that mental model is running 24/7, almost like ChatGPT, large language model. Like that is the model that I'm processing information in the world based off of reciprocity. And inversion is more where kind of I'm faced like with a tough decision, and I'll need to kind of invert it, so like look at it upside down, and that 9 times out of 10 that's where the answer comes from. So I wouldn't go and try and acquire everything at once. I would focus on like I mean, you said you mentioned the Bible earlier. Like, you first learn the 10 Commandments, right? So you first learn the most important things that if you just know those things, like you're pretty much 90% there. So I would say that with mental models, there are like a handful that if you know those, like you're literally 90% there, and everything else is really just the cherry on top. So like if you want to go down the rabbit hole, like once you're 90%, then like continue training your mind, almost like, again, like large language models and the language that they use. If you want to go down that, like I encourage that, but only once you've literally digested, internalized those handful, such that you recognize them everywhere. Like, and I wouldn't move on until that tipping point happens.
I feel like also making sure that you don't, like, I think there's too much wanting to take other people's version, whereas if you just go and live life, you'll find your own mental models. Like I think about this value creation, value capture thing. I think for me, it's really integral to how I want to see the world. And that's how I see the world. You know, like it's not necessarily how someone else, it's not necessarily how Buffett sees the world or how Manga sees the world. It's how I see the world. And as long as it serves me in my decision making and in my operation, it should be good. I actually wanted to
Exactly.
turn to Africa. You've seen a side to it. A lot of us have not seen a huge side to it. You know, you've been around, and you obviously work for a Pan-African group. Is the future bright? I've heard a lot about Africa in terms of the population, and very interestingly, we are in the coming decades, we are the youngest, and therefore we are the only youth, or rather the only population, the population with the highest working age people, which is very interesting, meaning, and there's a lot of macroeconomics that are correlated with this, we have a lot of earning potential, GDP production potential. But yeah, what is your perspective on the continent?
Yeah, I mean, from a structural perspective, Africa really is the last frontier of growth and it's pretty undeniable unless Elon and all these other guys succeed in making all these robots that can just produce things as well. So the only reason these companies are sprouting about is because of the high labor costs in first world countries, low labor participation rate. Everyone's pretty much middle class and whatever, and like most people's basic needs are taken care of in those countries, which means people are like having less kids. I read an article about I can't remember the area, but dog prams were outselling human prams in this one area, right? Which is insane. Like,
Yo.
I mean, yeah, for anyone listening who doesn't know what a pram is, it's a stroller. Like you push your baby in. So in
And
a
Liron,
certain
I've been
area, I think
talking
it was in
about
the
this with
walls.
my friends. Dogs are dangerous because they're replacing kids today. I love a cute pug, hey?
Yeah.
I won't lie. If I wasn't aware of this danger, I'd have a pug. But they'll replace your kid.
No, it's not even hyperbole. We like in the data, and if I think it was the Wall Street Journal, it was like some legit publication was writing that dog strollers are outselling human strollers, which is not, which is like, I guess, a funny statistic or a funny headline to come across. But like, if you think about the implications of it, there can only be growth where there's population growth, right? Like at least that's what we used to. We used to GDP growth through a combination of population growth and output, increasing output through efficiency and mechanization and automation and all that kind of stuff. But the bedrock of all economies are consumers. There have to be goods and services that you and I and individuals consume, right? Yes, there are a lot of B2B companies that sell software and whatever to other businesses. But the common denominator is that all these businesses exist to serve consumers ultimately, right? If the consumer is not consuming, think back to COVID. If people are not consuming goods and services, those companies do not exist.
Sure.
Right? So if people are not traveling, the airlines do not exist. If there aren't enough people, let's say the birth rate's going down, and granted longevity is going up, or expected life expectancies are going up in the first world and the globally, generally speaking. But that's a very different economy. That's an economy where you need a lot of golf courses, you need a lot of kind of leisure and entertainment, healthcare certainly. I mean, the biggest career growth or volume of opportunities forecast in the next couple of decades is actually in nursing in the US.
Sure.
So, I mean, if you look at all of these things together from a macro perspective, it can only be Africa as the next growth frontier.
Mm.
But I have to also caution, like, to come to that conclusion, we have to like look at the past, and the past is not the same as the world that we live in now. So like there are these countries and these companies now creating AI and robots and things that can and will replace a lot of manual labor. So if that is the case, then we may end up with a bunch of robot factories in first world countries, ultimately producing the output that is needed for consumers. And at which point, like, you don't need to really outsource manufacturing or those types of jobs to Africa. And if the population growth is slowing, well, then we probably need less farmland, and we need less and less and less. And like I'm more worried about what's the opposite of inflation? Stagflation or deflation?
Deflation. Yeah.
Because deflation, in a world where everyone's in debt and these countries are just like swimming in debt, and if it's a deflationary environment, that debt just spirals into complete bankruptcy and anarchy and turmoil. So like that's like something I'm more worried about, at least like in the macro environment. But like Africa's a complex place, and like I've really realized this like through working with a bunch of the other countries, at least in my organization, the amount of inefficiencies and which creates opportunity, of course. But the amount of inefficiencies is actually like quite incredible. Like like it's really almost like going in a time machine and seeing what the past used to be like. Where like, for example, to get, I won't name the country, but to get dividends or money out of a certain country, you have to send the documents signed in wet ink, couriered through to that country, to the Reserve Bank. Like in 2024, you know what I'm saying? So like you almost need to think about like how far behind are certain countries, and then like rewind our recent kind of knowledge or where we are now or where we were 10 or 20 years ago, and go implement those solutions from 10 or 20 years ago in like certain African countries. Like you can probably like make a lot of money that way. Because like some of these guys are really like far behind, and you know, a lot of these countries really still rely on like farming, agriculture, and mineral and metals output, and not you know, like a financial services sector that we have in South Africa, or like fintech, innovation, telcos, that kind of stuff. Like it's pretty nascent in certain countries. So there's a lot of capital investment that needs to take place. There's a lot of investment needed in education and upskilling and training. And change in certain, like, I mean, Africa is spoken about almost as like one country.
Yeah.
Like people like don't realize like it is so vast, and it's just so many different countries with different governments with competing interests and incentives, and a lot of them are, you know, only a few decades post colonization. I think there were quite a few Independence Days recently, like national holidays in a couple of our subsidiary companies. Like we're only a couple of decades after independence, and like we're still, I guess, trying to figure out how to govern ourselves, what's important to us as Africans, and how to create sustainable economic growth through different products and services and exports than we're used to. Because I think when these countries were colonized, like, cool, Malawi is, you produce sugar and tobacco, DRC, you produce that commodity, you guys produce that commodity, and like all of this is pretty much like whatever in service of either the British Empire or the French or whatever. And now, like, we're only like 5 decades later, like, cool, like, here's your land and govern yourselves. And like, I think everyone's still kind of unwinding those colonial or scar tissue and figuring out, okay, like, how do we create, a future for ourselves, and what value and what value we can we create, what products and services can we create, how are we uniquely positioned in the world, where we can capture some of this value for ourselves. And it's really just, it's similar decision making to like any single human being, really. And I think that you're just like watching it at a macro level, at a government level. So yeah, it's not simple. It's like not like you can open the tap and Africa will just blossom. Like India and China were unique because they're single countries with a single government that can kind of mobilize and legislate and cut red tape. Like Africa is just really a bunch of different countries on one continent, with different governments that have different values.
Sure.
So it's not like I'm cautiously optimistic, but there are a lot of structural barriers that have to come down, and yeah, a lot of investment that needs to come in, and I think we've seen a lot of investment coming from China and the US, and that creates the reciprocity in alliances and who African countries tie themselves to from an ideological perspective, whether it's communist leaning China or capitalist leaning United States, and so geopolitically speaking, it's pretty complex, and I think if like I'm not advocating for like some like South Africa or some government to be like the government of Africa and everyone's like just Africa just becomes one country. I think that wouldn't work, but we can't look at the case of China and India and say, oh, that must happen in Africa, because it's pretty different structures. And I think some African countries will do better than others, like significantly better. And I think we've seen that. And I think, I think it'll be very interesting to see the alliances play out. Who kind of aligns more with the China, Russia's of the world, and who aligns more with the kind of West. And again, that will come down to reciprocity, and money will talk. Whoever invests the most, whose bread I eat, his song I sing, kind of scenario. So I'm cautiously optimistic. I think there's fantastic opportunity in the continent. I think creating a business or buying a business or being involved in a business that operates in a lot of these countries, you're well positioned, at least as an individual, to capitalize on when the taps do open, or if they do open. Like I think it's going to be a scarce sought after skill / experience when the stars kind of align to be like CFO CEOs of these kind of Pan-African businesses, where there are subsidiaries all over the place, and different cultures, different ways of working, But if you've already had that experience, I think you'll be paid. There'll be a premium for those types of individuals and candidates. And that's, I mean, when we're talking about thinking in bets, that's the bet I'm kind of making career wise. Like if I don't end up starting my own thing, or any other, like my side hustles taking off, well, my hedged bet is actually like potentially going to be quite lucrative, because this is the thesis of why I joined this business, and the skills that I'm trying to acquire, and the network I'm trying to acquire. And so, I mean, I said a lot there. It's a lot of geopolitical stuff, a lot of kind of macro stuff. I don't think I forecasted anything, but I think from a decision-making standpoint, I'm trying to put myself in the best position should I've got entrepreneurial interests, but I've also got a potential career that and skill set and network that may be more valuable than average in a couple of years' time.
Cautiously optimistic. That is positive.
Yeah.
I'll take it. You also have to in some way close us off. You have some very interesting quotes. So I'm just gonna say it, and we can just riff off of that. You can just explain a little bit of the quote, and yeah, we can chat about it. I'm gonna start with this one. The most recent one is: nothing more expensive than that which comes free.
Yeah. I think, well, when was that? Like a couple of days ago, or like last week, or
Last week.
yeah, and I'll write these quotes on LinkedIn more as like a reminder to myself, so that like there's almost a public catalog of the things that I've read or heard or whatever that I think is interesting and I would like to share. In terms of the quote, I mean, you've seen it with people who win the lottery. It ruins their lives, right? It ruins most people's lives who win the lottery. It's not a joke, because there's nothing more expensive than that which comes free. So there's an influx of cash that you didn't work for. Therefore, there is no value to that money. Money is only valuable if you have earned it. So the money comes in. These people, lottery winners feel extremely rich for a time. It gets spent and squandered because they don't have the money keeping skills, because they've never been in that position before, right? So you don't have the skills to allocate that capital in a way that can sustain you for the rest of your life. So you buy Bentleys and you buy mansions, and everyone gets a car and everyone gets a house. And then in year 3, you're out of money. And then everything gets repossessed, and you're back to the way you were before you won the lotto. That is a very expensive lesson to learn, and a very, very painful one. So that I think that's probably the best example of that. There are a couple of other examples, like if you somehow talk your way into a high-paying job without having the credentials or the experience, you're going to have an expensive lesson, and you're going to tarnish your reputation. And because that thing came free, you didn't deserve that role. Either came through nepotism or however it came about, but you got to get a very expensive lesson as a result of that. But I think the lottery example is probably more on point with that quote.
The big takeaway is really, I think what you can operationally do with that is to build yourself. Because I think if you have been building yourself maybe by the time it always comes back to, so I've written about this. I haven't written fully about it, but luck is it's this great fallacy. I don't like it when people just say, "Oh, you're so lucky." They love to attribute, successes to luck. But
Yeah.
really, there really is no such thing as luck, because would you call the person who won the lottery and went bust after 3 years lucky?
Yeah, I think I mean you touched on something very interesting there as well. I think it was also in the Thinking in Bets book. Um,
Mm,
when I'm describing someone else, their fortune was lucky and their misfortune was based off of their own deeds. Right? They deserved their
yeah.
misfortune, but they were lucky for their fortune. But when I'm describing myself, I will
Mm,
tell you that I'm deserving of my fortune. Like I worked really hard, or uh, I'm smarter than average, or whatever the case may be. And my misfortune was an act of fate and not, or the universe, or something random. So when
mm,
describing others, we tend to invert that and say they are wealthy, or they got a promotion or whatever because they were lucky, or they
mm,
um, went bankrupt, or their solar business is in business rescue because they are inept, or
mhm,
like they're just bad business people. But when I'm describing myself, you know, uh, I'm smart. I'm a great business person because am worth X, Y, Z. Or this bad thing happened to me. It happened to me. I didn't do anything to cause it to happen to me. It's fate, or the universe, or whatever the case may be. So I think it's just a coping mechanism where that, I guess it can also be put into the mental model framework, but it's a coping mechanism that people use to justify other people's fortune or misfortune, and our own fortune and misfortune. And it makes us feel better
mm,
by inverting the luck versus deserved fortune slash misfortune.
mm. It's our way of, in a way, and not to say, because I do believe we're all on some level equal, but I mean, dude, I'm not Patrice Motsepe. I'm not gonna lie to you guys, but it's our way of coping with our feeling of inferiority, because
Yes.
in some way it's us it's us shying, or it's us blinding ourselves from the reality that we are not doing the things that can get us to the places that we want to go. So it's like, no, they're just lucky because, I couldn't do that. And if I were to go and chase my dream and get $1 million and become whatever, you know, no, that's not possible. It's just lucky. He's just lucky. I remember this just one time I was chatting with some of my peers, and this one girl who she was saying, basically, there's this one CEO of a particular company, and she heard her speak. So she was a woman of color. So that was sort of the correlation, the relation that was made, and so she's a big form of inspiration and representation to show girls of color that you can make it to this huge level. So she's CEO of this big company. And she's like, when she explained the story of how she became CEO, it was just like all luck. And immediately my mind went, ah. And I was like, okay, luck how? Right? So, okay, let's what was the story? And then she goes, oh no. She it's like she got put on by her mentor, and then this person, and I'm like, oh, okay. She knows how to network. That's how she got there. And so
Yeah.
people will always reduce success to luck in order to sort of cope with their own shortcomings. That makes sense.
Yeah, definitely. And I think I mean, I can share a fable that also
Mm.
illustrates this concept of cognitive dissonance, where
Yeah.
there was a there's a fox in a forest, and he goes and he sees a tree with grapes at the top of the tree, and these grapes look delicious, and he wants to get these grapes, and and the fox can't get these grapes, and he's like after trying so hard and whatever, like he gives up, and then he says to himself, "Well, the grapes must have been sour anyway. I don't even want them," and he walks away. So that's the cognitive dissonance that people use to feel better about not achieving goals or fortune not happening to them or whatever, by saying, I don't even want that. I didn't even want to be CEO because I want work-life balance, or um,
Mm.
or it's immoral to
Yeah.
work so hard and neglect your family. So I'm like, so people use that cognitive dissonance to justify certain things, and it's extremely powerful because you believe it. Like you make yourself believe it. Um,
Yeah.
and I mean, like a lot of capitalists um, make fun of communists or socialists by saying, like, if you guys were rich, like you wouldn't be socialists. So it's like almost like cognitive dissonance in there, in the socialist eyes, but like by by labeling capitalists and wealthy people, who most of them have created an incredible amount of value in this world and deserve every cent
Mm.
they've gotten, but they
Mm.
labeled as evil and uh,
Mm.
as exploitative and all that kind of stuff, because the socialists may not have had the skills in order to have become that themselves. So they go the polar opposite and say, I've never ever wanted that. And they virtue signal and blah, 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 blah. So
Mm.
I
Mm.
think it's also important for people to recognize their own cognitive dissonance in themselves as well as others, and be situationally aware.
Mm. Oh, yeah. Cognitive dissonance. That's another word for the dictionary, guys. Um, Basically, if just for those who haven't Googled it already, it's when your actions don't align with your beliefs. So you
Yeah.
believe X, but you don't do Y that aligns with your beliefs. So let's say you believe that studying is really important, and now you're not studying. So it's like, there's the existential angst where you feel like, hey, you feel like it's that imposter syndrome sometimes. Sometimes you're like, you're an imposter. No, it's also because you're not doing what you believe. But that's actually a thing for another time. Live for your eulogy, not for your CV. You said this in our introductory convo, not on LinkedIn.
Yeah. Um, I think I heard that quote on a TED talk,
Hmm.
where the speaker said, "Live for your eulogy and not your CV." And basically, that's really just saying, um, people will remember you for how you made them feel versus what you really did.
Hmm.
Meaning, regardless of your kind of professional path or what you've done to earn money, or what you've done for your vocation or avocation. What's really important is your relationship and how you made people feel while you were on this planet,
Hmm.
and the kind of character that you were, and
Hmm.
the person that you were.
Hmm.
Your CV is really just a record of the things you've done, the projects you've been part of, the companies you worked for, the businesses you built. It's really just a record. Your eulogy is more how you how you kind of did those things, how
Hmm.
you made people feel, how people will remember you. And if you kind of use that as a framework of how to live your life, I think you'll have a richer life than if you were just
Mm.
living it to rack up an impressive CV with a bunch of logos that really mean nothing at the end of the day. So yeah, that's kind of that framework of live for your eulogy versus your CV.
Mm. Focusing on not what you do for people, but how you make people feel. I think that's huge, because like there's one thing giving monetary value. It's like, could even think about it like this. You could be such a great manager, right? In terms of managing expenses. You could be the best financial manager. You cut costs all day. You can cut costs in your sleep, type of thing. But if the people around you, the people that you're managing, if they don't feel like they've been added to in terms of themselves, then your influence stops on the balance sheet. It stops on
Yeah.
the blocky, stops on paper, and it doesn't have that ripple effect that holistic influence has. So when you touch a life and not just the things that the life is attached to. So like, even when you're doing business with someone, they are let's say you are selling, you are selling, I don't know, it could be something so mundane. You are selling laptops. People are buying your laptops not for a 600 gigabyte SSD and an 8 gigabyte RAM processor. They're not buying it for that. They're buying it for their education. They're buying it so that they can, I don't know, start pursuing their artistic crafts and their artistic interests. They're
Yeah.
buying it for the things that make them, add value, or human in some cases. So when you're connecting to the how you make people feel as opposed to the what you do for people, you're starting to like transcend the CV and get to the eulogy. Now that's huge. Another one. The best inflation hedge: investing in yourself and increasing your value to society. Yeah, this one is powerful.
Oh, thank you for bringing that up. I actually forgot about that one.
It's huge,
And
man.
that is timeless. It is so true because
Timeless.
yeah, I mean, like if you're worried about inflation, like yeah, sure, you can buy some Kruger Rands and think that gold is a great inflation hedge. But at the end of the day, like if you invest that same amount in like some courses that will turbocharge your efficiency at work or enable you to provide more
Mm.
value in your business or whatever the case may be, like you're going to way outperform that gold asset class just through pure earning power.
Yeah.
And you just add like that compound effect of adding to your value and your knowledge and your network and all these things that may feel like you can't quantify them. So like
Mm.
I think it almost feels safer to put it in your cash in Kruger Rands because like you can feel them, you can quantify it, you can check the gold
Mm.
price and value what you invested and calculate that ROI. It's almost more certain, but the higher return is 100% to be investing in yourself and acquiring more skills, not in a haphazard and unstructured way without like any ultimate purpose. Like I wouldn't go and just buy all these Udemy courses and watch 5% of them. Or like you're not going to like you've obviously got to put in the work and it's got to
Mm.
make sense for either your job or the job that you want to get, or the business that you have built, or the business that you want to build. It's got to make sense in your context,
Yeah.
but it's way, way, way more valuable to invest in yourself than to invest in, another inflation hedge type of asset like a property or a gold that will kind of beat inflation slightly, but investing in yourself, you'll way, way, way outperform that, and by leaps and bounds.
And there's this, I was thinking about it the other day. There's this obsession with measurement that we have as people. Like, we always want to measure things. I realized that, like, so I don't measure as maybe stringently as I should. Maybe I know Peter Drucker. He was like a management consultant back in the
Yeah.
80s, 70s. Yeah, he wrote an amazing book that I read earlier this year, Managing Oneself. He says, what gets measured gets managed, right? Makes sense. But at the same time, it's like, I don't know. I'm just more concerned about what problem am I solving? I feel like measurement only helps if it solves a problem. And I think about self improvement, right? So there was this guy Andrew Kirby. He's also another internet business entrepreneur dude. I think he works for Alex Hormozy now. Funny. He said, it was like so profound. He said, entrepreneurship is the ultimate self improvement. And here's what it's prefaced by. Self improvement, it's, if you go into YouTube, it's if you go on YouTube, it's journaling. It's gratitude journaling. It's waking up at 5. It's cold showers. It's all these things, that are self improvement. But what he found is that he was consuming and consuming and consuming, and his life just wasn't getting better. And the reason why is because I think there was this mental shift around, no, it's actually not about doing these things. It's about solving your problems. So self-improvement is not a function of going out and improving yourself. It's actually a function of going out and solving your problems. If you have a problem with sleep, you need to start having a sleep regimen. You need to go and do some research on sleep. Maybe you need to lower the temperature. Maybe it's really hot in your room. Maybe you need to just set a specific time, wake up at a specific time, and start a routine. These are little things that might solve your problem. Maybe you don't have a problem with sleep. Maybe you have a problem with exercise. And you need to start learning a little bit about that, about how to make it fun, how to make sure it's sustainable, etc., etc. But it's always about, what is your problem? So to come back to this idea of investing in yourself, what are your interests and curiosities? What are those problems, questions that are in your mind? And that is a great place to start as to where you invest. So if you are really interested in, you could literally be interested in highlighters. You'd be like, yo, I love highlighters. I'm so obsessed with highlighters. Go do some research on highlighters. Go. Maybe there's a dude out there. Go search up the highlighter course on Udemy and learn everything about highlighters and the intricacies of highlighters. And you'll find, actually, as you keep going down the rabbit hole, you start learning about study tips. And then now you can actually start a business training people in studying, or whatever it could be. But the main thing is that you're learning how to make money. Before you're learning how to make money. You're learning how to build yourself. The next one.
I think
This is the last one.
I think people do like uncertainty, and they look to others to tell them what to do, and want a definitive return on invested or return on time invested and whatever. And that's why I guess the university system is so kind of entrenched globally, where we kind of go and learn some skills for a couple. We don't really learn skills; you just learn theory for a couple of years, and then you go learn the skills in the workplace. And that's kind of how we train. We just train to you know, I'm spending this money for this outcome. Like, I know that I will get articles after spending whatever. I don't know how much Varsity costs these days, but I'll, you know, it's pretty laid out for you. I'll be earning this much in first year, this much in second year, this much in third year. A qualified CA earns this much. Okay, so like I can pretty much quantify the ROI of the CA path. Doing other things, like following your curiosity, following like bettering yourself, like I think people are like looking around for like someone to guide them and like tell them like this will generate additional earning power, like definitively, like this will add 10,000 rand a month to your salary, like, and you're not going to get that. So and that's like you've almost got to like take your path into your own hands. Know that no one else is going to tell you what to do. Like that chapter of your life is over of
Yeah.
studying articles. Like once you get out of articles, like you've got to divorce that framework of how to be. And I think a lot of people get caught up in, okay, I need to do CFA, I need to do MBA, I need to do all of these things because like I'm in this perpetual cycle of getting designations because that's what I've been taught to do in the past. So now I need to carry on doing that because that's the only way to get a promotion or get whatever. And that's false, patently false. And you've just got to like follow your curiosity, add to your skill set that's relevant to you, that's relevant to the business you're involved in or to a business that you're thinking of starting, and have the faith that you can unlock that ROI yourself. It's not going to be given to you.
Back yourself. People, that is a huge thing that you have to. Thinking in bets, I'll always bet on myself. That's the one thing you gotta have in the back of your
Yeah.
mind. This one is like, yo, dude. This one, I thought about. I said, and I was like, this one is crazy. So this is how it goes. Food in the fridge is important. So is fire in the belly. Yeah, that was hectic. Yo, this one.
Yeah. I think this may have come from, I don't think it was a direct quote. I think like I was like thinking about it one day and I think I was just probably like unhappy with my role or the company I was working for at that point in time. Um, so it was really just a commentary on like it's important to earn a salary or it's important to have like income coming in, but it's not more important than like being excited about what you do. So that's where the fire in the belly comes from. And again, like there may be seasons in your career where you just have to tough it out, and that most likely is going to be articles where I would say most people don't enjoy their articles. And maybe that's just a blanket statement without substantiated data. I mean, maybe we can run a survey of article trainees, but I would say like sometimes you really do just have to keep the food in the fridge and like know that that fire in the belly period is going to come down the line. But I think it's very important to not get in that trap, that golden handcuff trap that some people get in where they just focus on the food in the fridge and getting a bigger fridge and getting more food and upgrading the food and they forget about the fire in the belly, what makes them passionate, what do they really want to do in this world. Because I don't know if like maybe I shouldn't talk about religion, but like my point of view is this is like the only life you're going to get. There's no afterlife. Like literally nothing happens when you die. You just get eaten by worms. So might as well, like this is heaven. Like you're in heaven now, so you might as well take advantage of it and not settle. So I'm sorry if I offended anyone with that line, but um, I think I think just using that framework of like this is heaven, like you can make the best or the worst out
Mm.
of what you've currently got, your short time on this planet, and you shouldn't you shouldn't let you shouldn't let corporates put those golden handcuffs on you and get addicted to the food in the fridge, because that is not what's going to give you the juice of life.
People get I love that you said that. Addicted to the food in the fridge. Um,
Yeah,
and yeah,
and
you like
it's a
even if you're not,
it's a
yeah.
it's obviously it's obviously a metaphor out, like, you know, obviously there are people that really are addicted to food and all that kind of stuff, but like this is a metaphor, you know, for, you know, golden handcuffs, salary, you know, all that kind of stuff, and that goes back to kind of the reason why I left banking, because I knew that there is a tipping point where you just can't leave.
Mm. You and I love you, dude. You get addicted to the food in the fridge. There's no other quick fix. This is just a plier. There's no one else. Like,
Yeah.
boss, like, give me the next hit. This one is so crazy, dude. Oh my goodness. Like, and before I even say this one, you said here 2 years ago, capturing thoughts and ideas in a centralized and accessible way is the most underrated hack hiding in plain sight. I use Evernote like a second brain to capture creative inspiration for later use. It makes me feel like Dumbledore. Over here, you were a magician. You were like Harry Potter in his prime. But yeah, just listen up, guys. Martial arts is just chess with pain. Business is just chess with money. Relationships is just chess with feelings. The lesson? Think in multiple moves, not just the next one. This one was heavy. Please tell me that was yours. This one was crazy.
It was mine, I think. Um, I don't really know where the inspiration of that came from. Like, and I mean, you said you write a lot, and I think you're probably getting a lot of um, ideas that almost mesh together, and then, you know, kind of,
Yeah,
you know,
yeah.
have aha moments and eureka moments with, like. So I think I did create that one. I'm not like, I don't know, when did I write that? Was that in 22?
22, yeah.
Yeah, so maybe I've got short-term memory. But yeah, I think again, like it's also like it's really about second order thinking. Um, and
Mm.
literally everything in life is like you've got to think of multiple steps. And I think I've been impulsive historically. I think I've got an impulsive personality, and I've got to remind myself to take a step back and think in multiple steps and think of second order consequences, um, as opposed to just the next step. And
Yeah.
I'd like to share a story about when India was colonized by the Brits. The Brits didn't like the snakes in India. Um, you know, the snakes. You know, there's some guys that were snake tamers that, you know, were blowing flutes, and the snake would whatever dance and whatever. But there were also a lot of other snakes that were just like, you know, wild snakes around. So the general issued an order that every dead snake brought to the general, to a British soldier, you would get paid X amount of money. What do you
Mm.
think happened after that order was issued?
I mean, people go out and they kill more snakes. So, yeah.
People created snake farms to breed snakes, and because now we've created an incentive, or that you pay me for dead
Mm.
snakes, so I'm going to create a lot of dead snakes, and the snake population dramatically increased. So that's a second order thinking in steps
Mm-hmm.
example. And it's vital in business to not only think about making a move that against your competitor or whatever the case may be. You've got to have like a multi-pronged approach, and overlay that with probabilities and a bunch of things that you think could potentially happen and the unforeseen circumstances of taking a course of action.
All's fair in love and war. I just thought about that when you mentioned how the relationships is just chess with feelings. Literally, like, yo, there's a lot of guessing, a lot of gaming. It's like, I don't know what she thinks. I don't know what he thinks. I don't know what It's a funny one. It's a funny one. A
Yeah.
really useful mental model that came to mind is incentive. I think not enough
Yes.
people think about what are the incentives in any given game. Whether it's we're trying to get the people to take out the snakes, whether it's I am trying to get my business off the ground, customer business, B2C, there's always an incentive that we need to understand in every single scenario.
Yeah, 100%. I mean, if I had a haircut the other day, but if I go to a barber now and ask him, "Do you think I need a haircut?" He's going to say yes because why? Like then he'll get to cut my hair. So he's incentivized to give me the advice that I need a haircut, which I don't really. And again, that goes to a lot of these financial advisors. An advisor can't be incentivized on your action, right? And that's also one of the issues that I had with corporate finance, investment banking, is
Mm,
you're trying to advise a company on something, but you're really selling them an idea so that you can earn a fee, right?
mm.
Um, so the advice doesn't come from a pure place, and maybe it's just like because I'm an idealist and um, I like the idea of the world being a pure place, which is obviously not, and people having pure intentions. But ultimately, if you show what I think Charlie Munger said, if you show me the incentive, I'll show you the outcome. So yeah, like the barber, if you ask a barber for a haircut, he'll tell. If you ask a barber if you need a haircut, he'll tell you you need a haircut. If you ask a recruiter for career advice, they'll tell you you need to take the next job that they give to you. Um,
Yo,
I guess that's also just a point to CAs looking for, if you're in articles and yeah, just I mean, recruiters do a phenomenal service um, to the CA community in bringing jobs to them. But if you're not paying for the service, you are the product,
hmm.
and that's a good model to think about. So um, yeah, if you're not paying the recruiter, the company's paying the recruiter, so that they're incentivized on your decision making, and as good intentioned as they are, their livelihood is based on your decision of joining a company that they're representing, and that you should probably use the reverse, Jeff Bezos's principle of the revolving door, whatever uh, re- the two-door decision-making process that Jeff Bezos uses, and think about it way slower than just taking it and being influenced by a recruiter to take a job.
Sure. That is so heavy. Guys, that recruiter in your DMs, I'm sorry. They're just trying to get into your contract, not not anything else.
Look,
Their
and
contract.
again, like I mean, I think the recruiters add a lot of value to CAs,
Yep.
and I'm actually pretty friendly with quite a few of them. Um, I'm just speaking from experience. I have taken jobs where I felt like almost like the
Mm.
reciprocity. again, reciprocity principle, where I felt like this recruiter has done a lot of work on my behalf for free. So they've delivered me value. And like, I need to take this job now so that they can get a commission because they've done all this free work for me. So like there are a lot of incentives, reciprocity, decision making, just going into a job decision. So I think, I think some of the things or the mental models we spoke about here may be useful, to the listeners going forward in their, job decisions or article decisions. Just think about who's incentivized, what their incentives are. Are people incentivized on an action that you should or shouldn't take? And divorce your decision from, and like, don't ask, like, they shouldn't be, like, they're not impartial, so that you shouldn't take advice, at least without a grain of salt, from people who are incentivized on your action.
Yeah, yeah, that's very wise. Like, I even go as far as to say, like, sometimes, guys, even your parents, because I know some of us, we come from homes where, there's black tax waiting when we get
Yes.
that job. There's some real what's the word? It's not bad. There's some real influential incentive behind a lot of these advisors. So just be wary, because now to choose earning over learning because of someone else other than yourself, I think it's a dangerous situation, because like learning is always going to benefit you and profit you in the long term. If there's somebody else who's now coming upon you and there's this external pressure, there's that intimidation threat. If we're talking about CPC, if there's that intimidation threat, then goodness gracious, man, I don't know if now you are taking the power of your decisions and making the best decision out of that.
Yeah.
Wealth is just evidence of previous value creation. We keep looking for the shortcut, but there is none. Just keep on creating the value. Wealth will follow. This one is like, for me, it's like, this is value creation, value capture. This one is crazy.
Yeah, it really just like talks to a lot of the other things that we were, speaking about. I think people want the value capture without the value creation. Want the easy way to the, to the multi-million in net worth, or whatever that value capture is for them. And ultimately, I mean, if we speak about that first quote, what comes for free is the most expensive.
Yeah.
Like, it just feels better to earn that value capture. It just feels like humans feel better when we, not when, I wouldn't use struggle, but when we strive and when we work hard for something, working hard for $1 million and actually like really like thinking and strategically putting a business plan together and like earning that $1 million, I can guarantee you feels way better than some long lost relative dying and leaving you $1 million in the will. Because like you can't attach a value to that R1 million. Like, you don't know what it took, like I value my $1 million through the blood, sweat, and tears that it took to create that out of nothing, for example, versus like it just being it just landing in your account. Like there's like almost that cognitive, I wouldn't say dissonance, but that disconnect of value attached to the rands. You know what I'm saying? So if you just focus on value creation constantly, the money will come and it will feel better, because you can actually, like money means nothing if there's no value attached to it. And the only you can really only attach value to it if you earn it. And I think there's a lot of studies around, how like people who pass, like wealthy people who pass money down to their kids, it's all gone in the third generation.
Oh
Right?
yeah.
It's all been spent by the third generation. It doesn't
I think
matter
I
how
think
much
the
more left.
Chinese proverb, I think the Chinese proverb goes, the first generation builds it, the second generation preserves it, and the third generation blows it. And that's not the Chinese version. It's probably a lot more,
Yeah.
mystical
Which
and
makes a lot of sense, right?
wise.
Because I mean, there's probably still some appreciation in the second generation because the second generation watched their parents struggle
Yeah.
and create that money and that value. So they saw their parents come home late and the phone calls and all of that kind of stuff. The third
Mm.
generation saw none of that. So there's still some value perception in the second generation attached to the familial wealth
Uh,
that was created. The third generation
mm,
has no idea. Um,
mm,
and of course, there are like certain cases of examples where like every generation actually works in the family business and like the longevity of um, that family like almost outlives, like it goes on. So like LVMH, the Bernard Arnault and his children, like they understand what their father has created and will most likely
mm,
like take it to new heights once the torch has been passed. And then Hermes, the luxury leather goods business also out of France, um, that's
the
been in the family for
Birkenbag company, if you don't know.
Yes, exactly, Birkin bags. I mean, yeah, if anyone is listening to this with a Birkin bag, good for you.
Call me.
Yeah. There are these cases of like these types of family businesses that yeah have gotten some recipe right where generation after generation just kind of takes it to the next level. But most of the time, the wealth is squandered in the third generation because they just weren't there to see how it was created. So there's no appreciation around it, and there's no value attached to
Mm.
that wealth. So, um, yeah, I guess this is a kind of a long-winded um, explanation to it, and I think it also kind of informs my philosophy around passing money to the next generations. Like, I like the idea that you should leave your kids with enough. Okay, the caveat here is obviously if in that position, like if you've made your hundreds of millions or billions or whatever the case may be, a thought experiment is, or the philosophy is, you should leave your kids with enough so that they can do anything, but not enough so that they can do nothing.
Oof. Yo.
Yeah.
Sure. Yo, that is powerful, man. Shoo. Yo, that's something to mull on because it's like we all just want money, right? We just want money. We want more, but like, what is actually the value behind it? It gets into this in some way. This idea of mine of words meaning nothing. So, in and of themselves, words mean nothing. Like, have you ever heard the term empty words? These words were empty.
Yes.
It's because
Yeah.
it's not about the words, it's about the message behind the words, the message within the words. And when you don't have, in a communication context, when you don't have the facial expressions, the vocal variety, and the intonation, and you know the pace, and all these things that eventually become a word and a voice and communication, if you don't have all those things, then you don't have actual context and the word means far less. So
Yeah.
In the same way with money, like if you don't have a story behind that money, when you don't have a effort, when you don't have some type of context, the money actually means very little. I know it's tough to say this in a South African context, but you know, when you're past survival, really, or at least, so there was this really interesting study done, and apparently in the US they found that the point of diminishing returns for money is about $75,000 a year, and that's
Yes.
1.3 million rands, right? So it's like 1.3 M. That's like what, 120 per month ish, like a little bit less, 115. That's not actually crazy. I mean, as a CA, you already now, when you qualify, you could probably, if you worked hard, you could enter a job with 60K monthly. So now you just need to double that over the next, 10 years? That's possible. So now you can get to the point where you're at that um, peak, right? But beyond that, your money means little to, less than little, because you're actually going to be taking away happiness from your life. So
Yeah.
yeah, I guess in summary, like it's just so important to know the weight behind your wealth beyond just the
Yeah.
numbers.
I mean, why does money exist? Money
Mm,
exists as a means of exchange between two individuals, um, and replace the barter economy, right?
mm,
So
mm,
before money existed, I would be a farmer, you would be a shoemaker. I would give you 5 chickens for one pair of shoes, right?
mm,
Okay, so your labor, your time, your effort, your skills went into making those shoes. So you provide, like you've created those shoes out of, like you spent time, there's value embedded in those shoes. And
mm,
I've spent time rearing the chickens and feeding them and housing them and keeping them away from foxes and fencing them in. So there's value attached to my chickens, right? Okay.
mm,
And then it became difficult to value things against each other and blah, blah, blah. So money was created. If money is just given for no value in return,
mm,
then there is really no perceptual value to that money. And I think
mm,
that's a very important point because you have not earned
mm.
it. So you will treat it as cheaply as you received it.
Yeah. Yo. Understanding like the difference. So even if you're looking at the stock market, people will also gamble on the stock markets, try to do that. Looking at the
Yeah.
difference between intrinsic value and extrinsic value, I think that's also really big. Just understanding that, and that's why I don't like investing and like stocks and stuff, because it's like I'm I'm all on the capture side if I'm trading stocks and I'm not really creating any value. There's the argument around liquidity, but I don't know. Intrinsic value is where it's at, like just from like an ethical point of view, an aligned point of view. If you created the company, or if you invested in the company as a private equity investor, like for an example, and you provided that advisory and that network capital and all those things, right? Then you are building intrinsic value. You're building real value, and therefore the money that you get for it makes real sense. It means something.
Yeah. Yeah. I mean, 100%. I think a lot of trading in Forex and stocks is really like just gambling and betting that the price will go up, or if you're shorting that the price will go down with no real, like, I mean, people who use charts, yeah, like it's really just gambling and putting patterns on a lot of things that are really random. Um,
Hmm.
but if you're a long-term investor and you want to value a business and you're doing a discounted cash flow and you really get into the weeds of understanding the economics of that business, and you chat to some of the employees and you reach out to them on LinkedIn and say, like, I just like to understand a bit more about how you guys make money, or what are your competitive advantages. And you actually do that intense work to understand and unravel why, why Novo Nordisk is exploding now in value because of, Ozempic and all these GLP-1 drugs, and what do they mean, and where can we forecast it out to in terms of, the diabetics and obesity market and all that kind of stuff. Like, if you really do the work, I think there is value in finding those insights that maybe other investors may have overlooked and or haven't discovered yet, and therefore you're putting your capital into something which you are placing a probabilistic bet that you think or know that the value is materially higher than where the stock is trading now because you've done the work. So and that's the kind of investing that I subscribe to. The investing where it's like, cool, everyone's buying Nvidia or whatever, like hype-based investing, like buying things because everyone says that it's going to go up. Like it's not investing. Like, you don't know anything, and you're going to be left holding a bag, when everyone decides to sell. But I do believe that there's definitely value in doing, and it's a lot of hard work, and I wouldn't recommend it for most people, and that's why even Buffett recommends investing in index funds for most people, because it's just it's an incredible amount of work. You don't really have an edge over the larger hedge funds, and it's difficult to beat the market. So why not just buy the market? But there certainly are pockets of value that you can uncover through doing the work, and the time invested in unraveling and solving that puzzle and creating a mosaic of understanding a certain business or a certain industry. There's certainly value, and the investor gets paid, gets their payoff when they're right on their thesis on that.
This is the last one, Liron. I know it's dark. It's dark these days, but it's just been too fire. It's the last quote. This one is also fire. I think this one is particularly valuable, even operationally. If anyone's thinking of, trying to put in a save the semester work strategy, working long hours is lazy. Ooh, that's a nice hook. I'm more interested in optimizing for deep work. 2 4-hour sessions per day seems to do the trick for me. It's easy to get into the trap of doing shallow work for 12 hours a day and brag how hard you grind. In reality, you're just leisurely grazing in a field like all the other sheep out there, deluding yourself and those around you of productivity. Yeah, this one was fire.
Yeah, but like listening back to it, I feel like it was almost too clickbaity, if that makes sense. Like I'm being self-critical here. I think there's a lot of truth to that. I think a lot of people kind of don't work smart in the workplace, and the first thing they do, they get to the office, and like the first 3 hours kind of speed by because you're mindlessly like checking emails and responding to emails, where most people are kind of in their most productive headspace is those first 3 to 4 hours of the day. So I would kind of time block those first 3 to 4 hours where you've got that willpower, and a lot of productivity gurus talk about swallowing the frog first. So like what is the most important and hardest and thing you don't want to do? Like if you think about Monday coming around and you procrastinate, like what is that one thing you really don't want to do? Like get that done first. Like swallow the frog first, because that's where your willpower should go for those first couple of hours, and not you know fooling yourself that you're being productive by reading a couple of emails and responding to them. Um,
Mm.
so using kind of your energy and your mental acuity appropriately throughout the workday, I think, is something that you've 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 got to be intentional about,
Mm.
and not just like do the kind of easy feel good things of like responding to emails. Like there's literally, you are not producing a thing, you're producing zero.
Yeah.
And that's the problem with all these communication tools and teams and this, that, and the other. Like, you've got to be able to time block your day and get things done, and then schedule time for like reading and responding to emails. And I can guarantee if like you're not going to miss something super important. If something is like do or die, life or death in your emails, like the person's going to phone you. So
Yeah.
don't worry about not reading an email for a few hours. I think we just kind of programmed to want to open messages as we receive them, and like that, the anxiety of hearing your email or a Teams message or whatever, or a Teams call. Like, just don't, like, turn those notifications off. Figure out what the frog is you're going to swallow every single morning, and swallow that frog. Um, Make sure it's done, because I promise you, like, at the end of the day, it will feel like you've accomplished a lot more than mindlessly going through your day, and kind of scratching the surface on a couple of tasks and all that kind of stuff. So, um, I think, and that's where the 12 to 14 hour days start coming in, where you're just not being efficient. Um, you kind
Mm.
of like, interrupting yourself and checking emails and checking LinkedIn, or, distracting yourself and procrastinating, whatever the case may be, and burning yourself out through that like mindless grazing like a sheep in the field, rather than like, being a predator. You want to, do these bursts of energy and then like call it a day, like be able to switch,
Mm.
off at 5 or 6 p.m. and not have to go home and work, or not have to work on the weekend, or whatever the case may be. But there's some, I
Mm.
mean, and then like, not getting that spiral of blaming the organization because there's so much work to do and so little time, and whatever the case, whatever excuse you tell yourself. A lot of the time it's just
Yeah.
you're not structuring your day appropriately, and you're kind of procrastinating through, doing very low value, low level stuff like replying to emails. Not to say that you should never, obviously, like, you need to reply to emails, but that kind of stuff should be done when you're feeling a bit more depleted. Like, it really doesn't take much horsepower to write a couple of
Yeah.
sentences and get back to people. And that should be kind of scheduled, I would say later on in the day, um, when your horsepower is depleted, because you've been kind of using it on the harder, more cerebral tasks. You've swallowed that frog, you've gotten that paper out, you've put that presentation together, you've created that financial model, and now you can, respond to some emails. So that's kind of
Mm.
the explanation behind that. Yeah, again, like, I'm a bit cringed about how I wrote that. I think I wrote it too emotively, or too like clickbaity.
Mm.
But yeah, like, we we kind of learn and grow, and I like having this record of writing things that, of how I'm thinking, how I'm feeling at that moment in time, and even if it does come back in the future to like give me the ick a little bit, that's okay.
Yeah, man. I mean, we're growing. I think like there's this fallacy that we don't change, and like, goodness gracious, people. people, and that's another thing. Like people don't want to start a personal brand because they're afraid that people are gonna fall in love with this. Dude, if your personal brand's authenticity, then really you'll find that I'm probably gonna change next week, guys. I'll be forthright with that. Um, I actually wanted
Yeah,
to
I
mention.
think it's also having like that public record of like of your growth and your evolution, right? Like,
Mm,
so what? So, okay, like I'm not. I wouldn't go and say anything like controversial or you know on the internet, and like we've seen that blow up in a lot of people's faces. Like
mm,
that is obviously we know that, but like creating a personal brand and evolving over time as a human, and your personal brand evolving over time, like that's normal, and
mm.
like people should just put that themselves out there. Like yeah, it's you're doing yourself a disservice, and you're missing out on a lot of so-called luck that just happens to people by not putting yourself out there.
Yeah. I also wanted to actually circle back to, remember you were talking about you have these eureka moments where you have all these ideas and they'll just like serendipitously connect and you'll write this
Yeah.
crazy post around chess and martial arts and all these analogies just about making moves, or rather seeing moves in advance. And one thing I wanted to mention to you is this idea of mine. Have you ever heard of the quote by Picasso? Good artists copy, great artists steal.
I have heard that quote. Yeah.
I was thinking about that, and I've been mulling on this idea for a while, and I see in that in that in that post that you made, I can see already when I heard you mention like, where did I get these ideas from? Good artists, the reason why they are good artists and they copy is because they have good taste. A good artist can't just copy anything. They have to know what to
Yes.
copy. And so, and taste is not an easy thing. Taste is, it's a matter of consuming like a lot of content, understanding the space, understanding what's cliche and what's fresh. That is what taste is, and it's not easy, but it's only a good artist's game when you just take that and you put it here.
Yeah.
But great artists, what they can do is they can steal. And I was like, what is stealing? Stealing is a function of both taste and tinkering. They know how to take an idea and also transfigure it to their inclinations, their own personality, all these things. So what essentially happened, and how, I guess, as you become more and more prolific, your artistry how your artistry progresses. I've always felt, I used to feel uncomfortable about like taking a quote and not quoting the author. Rightfully, I think like if I just took a quote, it was like that fire, and you just took it and you didn't quote the guy. I think you should give credit where it's due. But I'm seeing more and more how I actually don't need to quote as much because I know how to make an idea mine. I know how to take it. I know how to take multiple ideas and put them all together, and that's exactly what you did with that specific post. Because man, that was genius.
I'm wondering if Picasso meant like stealing other people's work or like other because do you know how art was created back in the day? Like yes,
Ah,
Picasso painted a lot of his own stuff at first, but then you almost got all these wannabe artists that came and apprenticed with you and and painted all your stuff, and then you'd come in and put your name at the bottom and created this kind of factory type of thing because you've created that personal brand, and now your output is so much more because I guess I don't know if you're not stealing, but you didn't paint the thing. You just put your name at the
mm.
bottom because these guys are apprenticed to you. Um, but I don't know. I don't know if that's what he meant. I mean, a great artist churns out volume for sure because sort of gain the Pareto principle where 80-20, like 20% of the art will create 80% of his wealth over time. But in order to create that volume and have that inspiration, like having all these apprentices in your studio painting things over time, and then you being able to cherry pick the ones that you put your name on, like it sounds like a sweet deal, and like a smart business model. So I'm wondering if that's kind of where he was leaning, like the good artists take inspiration from the people and paint themselves. The great artists steal. Like when I'm using stealing literally, like I don't think if Picasso made a direct copy of a Van Gogh, that would be stealing, right? That would be like I've stolen someone's IP. But another way to steal someone's intellectual property is literally like you're apprentice to me, so I'll own all your output, and I'm just going to put my name on the bottom and attribute this work to myself because of my personal brand. So we went very So I took you on a bit of a tangent there.
I liked it.
But
I liked it.
I think you're right in terms of surrounding yourself and consuming content from a certain number of people will inform your creativity and what you ingest and what you kind of commit to your subconscious mind. Your subconscious mind will spit out things that are kind of rhyme and are congruent with the people you are or the ideas that you ingest. And you start to think like, flip, where did that come from? Like, it's pretty obvious that it came from like, a bit of this, a bit of Alex Hormozy, a bit of Sean Puri and Sam from My First Million, a bit of the guys from Acquired, that podcast, or a bit of Charlie Munger, a bit of Warren Buffett. Like your information diet will inform how you think, will inform your opportunities, will inform a whole bunch of things. And it's sometimes very difficult. Like you may have heard a quote that verbatim you bring up in a conversation and someone asks you like, did you come up with that? And you're like, maybe I did. I don't know. I don't know if it's verbatim. I don't know if I've heard it somewhere, like, but I can't tell you who said it. But I think it will add value. Will add value to this conversation. So I'm going to say it anyway. And that's why I think earlier when you brought up that quote about, chess, like I'm surprised that I came up with it. I don't think I think I came up with it, but like I'm not 100% sure. And I think ultimately, like, what am I gaining? Like, I'm not really gaining anything or taking anything away from. Like, there are some guys on LinkedIn that will literally verbatim copy a whole post from like a popular page and then share that as their own. I've happened a lot, but like sharing like ideas, like one-liners or like a couple of like, and then like not attributing the post, like not putting it in quotations and writing who said that. Most of the time because I literally cannot remember where I heard it from. So like, I don't think that is immoral or, but I may be wrong. And if anyone reads anything I've written and can attribute it to someone else, like that's totally fine. Like I'm not trying to get famous or popular or anything like that. Like I'm really just trying to create a record for myself, at least, of where my thoughts were at certain periods of my life or my timeline, and more as like a reference point. So but I do see where it can become problematic, where I've seen people like literally copy whole posts from like a Justin Walsh or like some of these like really famous guys on LinkedIn and post verbatim on their page and get a lot of new followers and likes. And that's definitely stealing RP, and that's problematic.
Look, I think ideas aren't mine. I think ideas in general, they're not mine. So if someone were to go and take ideas and because I've got a lot of these ideas that I make up for myself that could be potentially valuable. I think it's more flattering than anything if someone's like taking my idea. So it's not illegal to do what those guys did. I wouldn't personally do it because I just kind of feel like I'm stealing someone's idea, even though it's like not mine. But I mean, if someone wants to, I don't know. I can't really judge. I don't know.
I think it's also like, I think we brought up like in varsity and school, like plagiarism's a huge no-no, and which is very interesting where the world is now with ChatGPT. It pretty much has plagiarized the whole universe. So I think like structurally, like school and varsity, placing such an emphasis like on plagiarism, like maybe that will change over the next couple of years, because information and knowledge is really a commodity now. It's not, no one owns it.
Yeah.
And like we've almost hit like a point in time where like what new knowledge is coming out. Like I think we basically discovered a lot of the big questions of the universe, and now we've got AI with incredible horsepower that's going to kind of solve and work on like the more difficult issues that haven't been solved yet. But we're at that point where, okay, like, are we going to need to start citing ChatGPT, like the large language model that came up with a research paper, and attributing, like citing it in our honors or master's theses, citing ChatGPT, like that sounds strange. So I think like, if I were to make a prediction in the next 10 years, like I would, I think the emphasis on plagiarism and that kind of stuff would decrease over time, because knowledge has become commoditized and will be increasingly commoditized now with all these large language models.
Yeah. Yeah, that's it's funny. It's like, nah, we're CAs. That tech stuff, it's not for me. No, guys, it's coming for you. It's coming for you.
Oh yeah,
Liron.
I think if you think you can, not learn about the movements in tech, especially the impact on the workplace and how to use tools that make you better, I think you're mistaken, and you're not going to go very far in your careers, or at least not reach your potential from an earning power perspective. I'm not. I don't subscribe to the doomsayers that there's going to be mass unemployment. But I certainly think that it's very useful to at least stay abreast of new tools and ways of working that will help you, and help you become. People talk about 10x engineers, like the guys who created Facebook and Twitter and now X, and they had like a team of 10x engineers, meaning engineers that are so productive that would take like 10 other engineers to like match them. And I think the same can be said for, there are certain CAs that can be 10x CAs, and the 10x CAs are the ones that are constantly learning and implementing new tools and processes and procedures and SOPs and all these things, but like to a level where it would be like take 10 average CAs to do that amount of output. So I would encourage the listeners to almost like write down what do I think a 10x CA looks like, and try and model that, and and see where it takes you, because that's a good framework to use.
Sure, that is powerful. Sure, I've written that down. Guys, become a 10x CA. Liron, if you could go back to first year, second year, maybe even high school, Liron, what would you tell him?
I would tell him to not be as impulsive, to think more about second order consequences, to think in longer term horizons and not in months or weeks or years, like decade long. And I'd probably tell him to have more fun as well.
Have fun, man. I promise you, life is
Like
here.
life's not that serious.
Mm,
Problems are solvable. Like, don't be so stressed. Don't take yourself so seriously. No one's really looking at you. I don't know if you like some people like think like you walk into the gym and like everyone's looking, like no one cares. Like, you do you.
yep.
Like, don't have that spotlight tendency where you feel like everyone's eyes on you. Or if you feel like, you write a post on LinkedIn and you don't get any likes, like, okay. Like, like that stuff doesn't matter. What does matter is just try and keep growing and creating value, and everything else will fall into place. And just, yeah, if you fail a subject, if you fail a year, like, don't try not to compare yourself to others. Everyone's journeys are different. Everyone's circumstances and starting points and resources are different. And yeah, just try and learn a couple of frameworks and mental models early that will be net positive in your life, and help you avoid common pitfalls that humans in general make. And I think that that advice to my younger self would have been valuable, and I probably wouldn't have followed it, because youngsters we don't.
Yeah.
That's the thing with advice, man. Like, it's cheap. It's like unearned money. It comes from someone else, and it kind of goes in one ear and out the other. So, like, I appreciate the question. Like, it's nice for me to now say these things, but on the receiving end, and I've been on the receiving end now. Like, a businessman can tell me all these things now of what to do, what not to do. And like, I just can't map it to context or contextualize it, and I will forget about it, and I will not follow that advice. So I think, yeah, let us not put too much of a premium on advice giving or receiving, because, and rather put a premium on just go out there and do things, try and add value, and you will find your way. And download a couple of mental models into your brain that will help, steer you in the right direction. But in terms of definitive black and white advice, like, frameworks are probably better than just advice.
We underestimate what we can do in 10 years, and we overestimate what we can do in a year. So
Yeah.
I guess that can be the first bit of advice. Advice, sorry, bro. But you're gonna get advice, young Liron. There's some advice coming for you. Less advice, more feedback. I do definitely agree with that. I think you really need experience to inform any type of advisory. So advice is cheap, but I'll still say it. I'm gonna preach for you, bro. So that's the first one. Second one is, like, dude, you're not everything. I think, like, today we the meaning of the word care in the hyper connected world we live in, like, a lot of these words, they really, we've cheapened them. Like, just because they liked your post doesn't mean she cares. Just because they liked your post doesn't mean he cares. Just because your friends on Facebook doesn't mean your friends. And if you could just take so there's this thing called the spotlight effect. You think it's all you. If you could just take it off you and just realize that there's actually a world stage, and truth be told, everyone thinks that they're important and you're insignificant.
Yeah.
You could probably just relax.
Everyone's worried about
have fun.
Everyone's worried about their own spotlight. So yeah, just take a chill. Like everyone thinks everyone else is looking at them, and I think it's just human nature, honestly.
It's human nature. It's human nature.
I also think like in school we actually we have the yardstick of grades to measure ourselves against our peers. Like you see students the A students are cleverer than you, right? Or are doing better than you. Same in varsity, like you've got grades or and all that kind of stuff. But like when you're out of that cycle, you're still trying to measure yourself against your peers or those who you grew up with. And then you start status signaling, because that's really the only way to kind of measure each other. And like there's a lot of lying that goes around that with debt, financing cars and houses and holidays. But that's really just all signaling, and that's the way that people try and measure themselves against their peers after with the kind of grading system has been taken away from us, or we graduated from that. So I'd also try and stay clear from status signaling, because it's just not worth it. You're just going to do yourself a disservice. There's always going to be someone richer than you. There's always going to be someone poorer than you. And that's it. Do stuff that gives you where you can squeeze the juice out of life. That makes you happy, that puts fire in the belly, while putting some food in the fridge as well, of course.
Yep.
And yeah, just like try not to take yourself too seriously. No one really cares much about always watching you and your mistakes, or anything like that. So try and have a bit more fun, and life is longer than we think, but also shorter than we think. So like try and keep that dichotomy in your mind as well.
Sure. Don't compare yourself as well. Keep the status signaling low. I like to think of status signaling as debt signaling. It's like, chances this guy, he doesn't actually own those cars. If he missed his payment next month, you probably won't have them. And also, learn those mental models. I think there's lots of valuable mental models out there. Pick one and use it. Guys, if you've not already, please, please follow this. Sure. Subscribe. This is also going to be a video. Yes. See, man. Also, Liron's LinkedIn will be linked in the show notes. Goodness gracious, man. This was value packed. I actually want to, guys, please also send me DMs, send Liron DMs about like what you learned, what was valuable, because I think there was just 1,001 things. But I hope it does not end, but that it begins in CASA. Liron. Thank you, man.
Thanks, Alunga.